There's no telling how that would end up, but that's okay. Excuse me. Welcome to the room, ladies and gentlemen. I'm excited today. It's going to be a good day. Going to be a fun day. Yesterday, hey Jay. Yesterday, holy consolidating markets, right? Man, yesterday was one of those days where if you were patient, it was pretty good. If you had to create a trade rather than wait for a trade to happen, you may have found yourself with some challenges. I hope everybody found success yesterday. But that was probably one of the most difficult days I've seen in a while. Not sure why. Sometimes it just happens. Sometimes the buyers and the sellers, the people that control the market, they can't seem to get along, and they struggle to let one win over the other, and that's okay. Yesterday was a great example of the fights that happen in the market. Let me see if I can find the picture. I took a picture yesterday afternoon. There's one of them, of all the consolidation, and that was gold, I believe, or maybe the NASDAQ. That was the NASDAQ, guys. Look at that consolidation. Look at that fight between buyers and sellers. So for you guys that are brand new with me here today, I'm going to give you just a little plan to help you avoid this nastiness. If you have experience trading, you've probably heard of consolidation. You've probably heard of chop, and you know that it's dangerous. Last trade slipped you another 3 ticks, but you got slipped on the good side. That's a great thing, Ron. Man, I actually had a really good day yesterday, but it was so much patient. And all the hours I spent in front of the market yesterday, I took 4 trades total. Won every one of them, but it was a lot of patience yesterday. This morning, we're going to go through the routines. So for those of you that are brand new with me, there's a kind of a syllabus, but not really a syllabus for this classroom. The first thing we do every day, though, is we go and we look at news. Make sure that there's not something going on that may affect the market. We are in the throes of the 9 a.m. medium impact S&P composite. I don't know if it's doing anything, if it did anything. Maybe it did, maybe it didn't. But at 10 a.m., we've got CB consumer confidence. And I want to really stress, guys, for me personally, it doesn't matter what the news is. This may as well be cheeseburger consumer confidence, right? How are people feeling about the cheeseburgers? But what I do know is that if I see a red box or an orange box, it means that there may be an emotional reaction that could upset the flow of the market, that could reverse the direction of the market, that could make it spike and pull you out of a trade at a bigger loss than you were anticipating, guys. So part of my trading plan is to never trade into high impact or medium impact news because honestly, my patterns may not work with that emotional response. So I check this every day. This is the first thing I do. When I open up my charts, they're loading up. I go to that forexfactory.com. And then everything that I talk about, all the answers that you guys need are going to come from this main page. They're going to come from the nexgent3.com. And under the education tab, there's 2 that are really noteworthy. The first one is the software guide. This is your NinjaTrader how-to. NinjaTrader is the tool. It's the platform that you run the software on. NinjaTrader is where you will enter, where you will exit trades. NinjaTrader has charts that need to be scaled. Sometimes you may build charts. Sometimes you may have to close a workspace, open a workspace. All of the how-tos are here. Each and every how-to is right here in the software user guide. So if you're brand new, go through, play with it a little bit, practice some of these things, make sure that you're comfortable with it. And then from the education tab, the trading guide. The trading guide is where everything that I talk about comes from. I say it a lot. There are no secrets with Nexgen. There's a million ways to use the software. I don't teach all of them. But I will give you, my promise to you each and every day is that I'll give you everything that you need to be successful with the software. I won't hold back in that regards. And I'm going to do it, excuse me, allergies are going crazy here. with what we call a high probability trend trade. And this is my focus for the first hour. Every day, the exact same conversation with you. We talk about this high probability trend trade. We talk about this trade where each indicator on every chart agrees with the rules for the trade. And I do this for a couple reasons. The first reason is that the high probability trend trade typically wins 70 to 80% of the time when you follow the rules. So it's that win percentage, it's that confidence that comes through the memory of success that this trade really helps develop, guys. What you're doing is you're developing trust. And this high probability trend trade, when each indicator on every chart agrees with the rules for the trade, this is the best of the best. This is going to optimize your chances of success. This is the one, most importantly, it is going to teach you to read your indicators. It's going to teach you to look at your charts and say, my indicators say, rather than my emotions are suggesting, guys. Rules help eliminate emotion. And once you understand this high probability trend trade, most of you will pick it up in the first week or two if you stay focused. You're going to be able to read your charts. You're going to be able to understand what your indicators are telling you. And then ultimately, you'll piece some things together to create a trade. But chart reading is about 90% of your day. 90% of your day is spent reading your indicators. 10% of your day will be actually taking trades. And then Pete, I think you said, me too, 4 trades yesterday. I only took 4 trades yesterday, guys. I hit my goal. It wasn't hard to do because I followed my rules. There will be days where you do virtually nothing, but the wait is typically worth it. And once you can read your charts, guys, once you're good at reading these indicators, and again, I'm going to teach you how to do that, you're going to understand where the market is likely to continue. Initially, this likely to continue point becomes your entry for the highest probability trend trade that we teach. You're going to understand where the market is likely to go eventually, and you're going to be able to make good decisions based on targets from the information your indicators give you. Jen, you put a beautiful example of that in this morning that we'll talk on. And then you're going to understand where the market is likely to stop. Likely to stop areas are what we call termination conditions. And these are just big lines on a chart that say, hey, don't trade into this area. This area may create a bounce. It may stop the market. It may create a reversal. You're going to be able to pick all of these out, and you're going to understand these, and it's going to become second nature over the next week or two if you focus on this one trade first. This trade builds a foundation. This trade is putting down 80 feet of concrete on which to build your trading skyscraper. This is the trade that only has 3 rules, and each rule is designed to create an advantage or to have you recognize an advantage. Rule number 1 says that your large chart needs strong trigger lines. Strong trigger lines provide the advantage of momentum. This is the first advantage that you're giving yourself when looking for a trade. Next, we have to make sure there's no termination conditions, none of those likely to stop areas. This is going to give you room to your profit targets because let's be honest, guys, we're here to make money. And we're going to call that a clear path. Momentum lets you see a market that's likely to continue in the direction of the trend. A clear path says there's nothing to slow that momentum down, and these advantages on their own are enough to create a trading plan that's consistent, that's profitable, that's even high probability. Excuse me, 1 second. Sorry, YouTubers. I apologize. Once these advantages are in play, these two rules met, you're going to define where the market is most likely to continue. And rule number 3 is unique to the high probability trend trade. Rule number 3 is going to define the point on the chart where the market is most likely to continue with the trend. This is going to be your first entry rule. Once you understand these 2, you will find more. There's no doubt. You won't even be looking for them, and you'll find more opportunity. These 3 rules happen on only 2 charts. And there's a lot of, hey, Frank Kirsch, I'm going to say hello. I don't give up the microphone. Guys, if you have a question, and I always assume people are just waving when they're new when I see this, just type in here. If you have any questions, anything at all, guys, please just drop them right in the chat box. I try to make sure absolutely no questions go unanswered. If I do miss a question, please let me know. Go, hey, Mark, you missed one. At 8:47 a.m. I had this question and I need a little help, and I promise I'll get you. But I'm going to go through the little why we do what we do, and then we'll start going, guys. 2 charts is all it takes to understand these 3 rules. 2 charts, in my opinion, is all you need to really get the most out of this software as a brand new user. Because the more you give yourself to think about, guys, the more likely you are to go outside of the rules that are designed to give you success. Your large chart leads the way. Your large chart is a very slow moving chart. It's like a broad stroke of a brush, guys. It doesn't show change very quickly. It's slow moving. And on the very first bar of the large chart, the most current bar, the one where price is actually going up and down, you will be able to find the direction of the market through the background color. Green is up, red is down. How easy is that? You will define the momentum, having those strong triggers from rule number 1, and you will define the areas that may create trouble for you. And that's rule number 2, making sure that you have a clear path. 66% of your advantages, guys, the 2 advantages that are enough to build a trading plan on, happen on this large chart. And we'll never even turn our attention to a small chart until the rules are true. One of the things I encourage you guys to do is create this commitment from day 1. The only way I'll enter a trade is if my rules are met. And when they are, we're going to go to a smaller chart. It's a faster chart. It's a refinement chart. It gives an x-ray of this 1 bar. And inside of this 1 bar, there is a pullback, and then there is a continuation very often. We are going to pinpoint exactly where the pullback is likely to fail, exactly where the market is likely to continue. And that's where rule number 3 comes in. And using this refinement chart, the smaller, faster chart, what it does for you is it's going to reduce risk. It's going to maximize profit potential. I'll give a little picture of that just so you guys can see it. Large chart leads the way. Large chart says, hey, we're going up strong. Life is good, let's go up or down with it. The small chart inside of this 1 bar is all of this movement, and that circle is the entry for the highest probability trend trade. This is the precision that you're going to find with this smaller, faster chart. We use the 2 charts because they're really just a representation of who you're trading with or against. One of the sad things, especially for all you alphas, is that you're not in control. You'll never be in control. You'll never have an impact on this market that makes it go up or down. So it's easiest to just go with the market, go with the flow, trade with the large crowd. The large crowd are the men and women that have the money, the influence, everything that's needed to create trends, to establish momentum. And the large crowd are the people that are reacting at these key areas that you know about long before you reach them. So one of the easiest ways to remain successful with the software is to simply never fight the large chart. Never go against the large crowd. Of course, there's always people that do, right? The small crowd. And once again, guys, the small crowd has more money and influence than you ever will. And they create these little rifts, these little pullbacks on a smaller, faster chart that you're able to see. Large chart never changes during these pullbacks typically. You guys are going to pinpoint exactly where this small crowd is most likely to fail, or where they're most likely to exit their position and give up the fight. This failure point becomes your entry for the highest probability trend trade. They typically fail 70 to 80% of the time, which means that once you're capable of pinpointing exactly where the market is most likely to continue, you can put yourself into a trade that typically wins 70 to 80% of the time, guys. Simplicity yields the best results for the brand new user. And there's a way to get to where you want to be fastest. I fought this path tooth and nail, hard as I could, refused this path. That's why I'm so adamant on teaching it, guys. And one of the reasons that I teach this room is because there's not a mistake that you'll make that I haven't already made and figured out a way to fix it. So I try to teach with the fixes without you having to make the mistakes. Learn the rules. Learn the trigger line and the Fibonacci rules for when it's okay to trade. This is the first hour of every day where I talk about those 3 rules, those 3 advantages. I'm going to show you exactly what they look like. I'm going to teach you exactly how to study them. And honestly, guys, I'm going to teach you how to prove me wrong. If you're skeptical, if you're in here and you're like, there's no way this is snake oil, I'm going to show you how to prove me wrong. And I hope that you try, because you will be with me forever. You guys have to simulate. You have to practice. You have to be willing to get into the market, to get out of the market, to practice moving stops and targets, to take trades that you think are trades, to make mistakes. But most importantly, guys, you've got to make yourself just a little bit vulnerable. Show me your trades. Show me exactly what you saw on that chart. Take the time to type out, hey, Mark, here's where I saw the momentum. This is what it meant to me. Did I read my chart correctly? Hey, Mark, I didn't think I had one of those termination conditions. Double check my read. Here's exactly where I said my path is clear. Was it in fact clear? And then show me your entries and show me your exits, guys, because there's lessons through everything. And the better information you give me on your charts, the better you annotate your charts, the better the feedback is going to be in this classroom. And the whole idea learning the software is the feedback that you get. You need somebody to tell you what you're doing right and wrong so that you can focus on embracing the correct and rejecting the incorrect. I'm going to encourage you guys to not become simulator millionaires, to not trade 100 lots because it inflates your ego, to not just hope things work and fight everything and wouldn't it be cool if I was the first one in, guys. Practice your rules. Practice following rules. Be okay breaking them, but let the idea of following rules be the goal. Every time you post in my room, it's a private session. Every time you post in my room, you will get the feedback. Give me the best information so I can give you the best feedback. We're going to simplify a lot. We're going to talk about this high probability trend trade. We're going to break it down. We're going to break it into 3 separate looks that create a trade. We're going to talk about it over and over and over again. And you have to understand what looks you're going to commit to. You have to understand the idea of momentum. You need to be able to recognize whether or not it's a clear path and finally that entry area. And you've got to learn those looks so that they become easy, guys. And repetition creates recognition. Trust me on this. And that's where the second half of getting to where you want to be, ASAFP, comes into play. Track your real-time performance in the spreadsheet, guys. I give you this spreadsheet every day, usually 3 or 4 times a day, because for whatever reason, you guys don't like to grab it on the first run. The first tab of this spreadsheet is a trade journal. That's all it is. It's a place for you to put your trades, to talk about what you saw, the momentum, what happened, and then most importantly, the feedback from class. I took this trade and I thought it was amazing. What did Mark say? Did Mark say that I could have had a better entry? Did he say perhaps that I was a little early, a little late, that I wasn't trusting areas, that I was fighting momentum, guys? And if every morning you wake up and you study the previous day's trades, waking up, and it may be 5 trades, it may be 20 trades. It won't take you more than a cup of coffee to get through it. Ask yourself what worked, right? Pinpoint those patterns, those advantages that are bringing you success. But make sure you ask yourself what didn't work. Maybe you trade into termination conditions. Maybe you jump in late. Maybe you're hoping areas break when the indicators say that they're not likely to, guys. You will get that feedback, and you'll be able to go back and remind yourself what felt easy and what felt forced. And this little historical study each and every morning, it's going to prepare you for the day. It will accelerate the learning, guys. There's no doubt in my mind. The second tab is where you make sure you're comfortable with the rules individually. The green sections on the second tab are what it looks like to have the rules met. Strong triggers, clear path, and then the entry area. I'm going to give you a sheet that gives you instructions on how to fill this out to become a chart reader sooner than later. I'm a big fan, right? If you know what it looks like to have strong triggers, that's great. But why not commit the look to memory of what it looks to have that advantage gone and what it looks like to not have room to your targets? Because you really need to know both sides of the coin, guys, and that's what's going to help you be consistent. There's a favorite look section where as you develop your own plan, and you will develop a plan based on your ability reading the indicators, you're going to start to fill out what it looks like to have your trade, your high probability trend trade, your momentum trade, your HVA trade, whatever trade it is, you're going to build a library of exactly what it looks like to have the rules met. You're going to have to manage the trade. There's a section for those pictures. One of the reasons it's so important to show me entries and exits in this room, because there's a lot of information between getting in and getting out, and sometimes it might be easier to get out and re-enter and save a little money. There's patterns that repeat themselves all day, guys. The high probability trend trade is nothing more than a pattern. It's a pattern that's been proven to win more than it loses. And then there's a whole section on termination conditions, because that's the most broken rule out there. 15 pictures a day, annotated, gives you 300 pictures a month, guys. At the end of 90 days of study, you should have more than 1,000 pictures and a really good idea of what it is you're looking for. As you develop those, the final one is kind of a roadmap for what it should look like on your favorite looks tab. I actually put in the entry sequence for long and short trades. There's management. There's patterns that repeat themselves. There's a whole lot on termination conditions. And then, guys, the green section is really you guys being brilliant with the software, embracing these advantages, finding entries, taking great trades. But these are client trades. I'm going to encourage you to not be the trade police. When you look at these charts, let's look at advantages. Let's go through and talk about what Marshall deleted his picture, apparently. I have to go through and clean this out, I guess. They're not all going to be working links. But the ones that do work are going to have very common themes, showing you great entries, showing you momentum, showing you room to targets. And you can start to commit these looks to memory a little bit as well. And one of the things that I like it when new users do is go through these and re-annotate their charts. They said they had this, but this is the read. Let me put it in the room and see if Mark agrees, right? So the spreadsheet really pays dividends, guys. The more you fill it out, the quicker you're going to get to where you want to be. Just for reference, my library has just under 5,000 pictures in it. This computer is not that old, less than a year. My laptop, which I was using for about a year, has over 10,000 pictures on it, guys. The more pictures you take, the easier it is to recognize these looks. It's almost like the market slows down. So that was a little long-winded. Guys, I teach this room very specifically. We focus on advantages first. Momentum drives it. Momentum is the one. Oh, can you guys hear me? Give me a Y if you can hear me, please. All right, so it's going to be Pete. If you ever see someone say lost audio, or you ever post in the room, I can't hear you, if you see a bunch of Y's after that, it means that it's you. And Pete knows that, but I'll remind him. And it happens sometimes, guys. Sometimes, you know, it's the internet. So rule number one, we're going to focus on advantages, guys. That's all we're going to do for the next hour. Rule number one, strong trigger lines. Strong trigger lines happen on a large chart. Strong trigger lines give me the advantage of momentum. Strong trigger lines will be the easiest lesson that you ever get on a large chart. If the background is green, the trend is up. If the trend is up, you should only be looking for rules to be met for high probability trend trades long. If the background is red, the trend is down. You should only be looking for rules to be met for high probability trend trades short. So easy, go with the flow. In an uptrend, the background is green. Your small triggers, these solid lines, must be green. These are the small triggers. These are a fast-moving average. Your large triggers, the dashed lines, must be green. If the colors don't match all the way across the board, you do not have strong triggers. What a great safeguard. Strong triggers means that your small triggers are up and above the large triggers, that there's space created between the two, and that your trigger lines are wide and angled in the direction of the trend. When I have this look, the odds are favorable for the market to continue down. In a downtrend, it's the same. Small triggers are red, Large triggers are red, background is red. Space between the small and large lets me know that the odds are favorable for the market to continue down. I'm going to take a picture of the picture. I'm going to get a little artsy-fartsy on you guys. When we talk about strong triggers, what I really want you to do is I want you to think about scissors that are open. And when scissors are open, they have the ability to cut. They have the ability to get work done. So whether it is up or down, open scissors, that's your look. That's the one. Best of the best. And then the opposite of strength, what if those scissors close, right? Now they're closed. Looks like a bird. Now they're closed. The momentum is gone. And when those scissors close, we call that a weakness of the large triggers. This is strength. This is weakness. This is odds favorable for the market to continue in the direction of the trend. This is anything can happen, up or down. So as a brand new user, and really as an experienced user, learn the difference between strength and weakness. And then your job is to actually commit to the strength, to say to yourself, I don't want to be in a trade if I don't have that advantage of momentum. And this is crude oil. And you can see strong triggers down, and you can see strong triggers up. And one of the easiest ways to get to where you want to be is not to be taking trades, and boy, they just killed it, up and down. There we go. We'll take some with a little fluctuation to recognize strength. And it happens a lot, guys. Strength is everywhere. And then there's weakness right at a key area, and that's where your reversal happens. And there's the trigger lines not matching the background, weakness. And sure enough, that precedes the reversal, guys. One of the easiest ways to get to where you want to be is to take pictures, to go back historically, to commit these looks to memory so that when the market is live, and let's go to the live market, and here comes your first pop quiz, ladies and gentlemen. Do I have odds favorable momentum in crude oil? What do you guys think? Take a guess if you're not sure. Absolutely, guys. No. Great. Thank you for playing along. Rule number one's not met. So I'm just going to sit on my hands. I'm going to let the people that drive the market figure it out, because eventually one of them's going to win. Once I have momentum, though, guys, once rule number one is met, we're going to go to rule number two, because it makes sense. Rule number two says no termination conditions, no areas likely to stop the market. These are going to be lines on a big chart, guys. That's the easiest way to say it. Areas on a large chart. I'm dropping this in the room as well. I'm going to give you this in PDF form. But horizontal lines. So brand new users, Shadow Picks and George and Chief Redneck, best name ever. Horizontal lines on the large chart may stop the market. Here I've named them for you so that you know what you're hearing in class. But if it's horizontal, it can stop the market. Divergence high. Divergence is a line that prints off of a pivot. You'll see a negative number associated with it. This line lets me know that even though the buyers were pushing up, they lost momentum when the market went back down. So divergence is a loss of momentum. You'll see it light blue lines from a low, cyan lines, magenta lines from a high, pink. Fibonacci resistance. When the market is trending up, guys, this is a point where the market may stop, may bounce, or reverse completely. Fibonacci support, the blue line. When the market is trending down, this is an area where the market may stop, bounce, or reverse completely. There's also yellow one-to-ones, and these are like fibs that print in the moment. If the market's going up, they may behave as resistance. If the market's going down, they may behave as support. And guys, all of these lines are capable of stopping a market. All of these lines are where these guys are most likely to have a reaction, where the people in control are most likely to enter, to exit, to take profits, to fight. And one of the easiest things you can do is stay the hell out of their fights, guys. Let them have it. The easiest trades happen between areas with momentum. So there's a simple recipe for defining a termination condition, and it starts with price reaching the area. If this is where the large crowd, the people in control, are going to make decisions, Well, then we have to let the price bars get there. Your dynamic Renko bars trending up, everything's up, and it hits Fibonacci resistance. It hits a divergence high. It hits a yellow 1-to-1. Once it reaches that area, your job is to ask yourself, where are my triggers? If they remain below resistance, small and large, this is an area that may stop the market. This is an area that may create an untradeable bounce. This is an area where fights may happen that you don't want to be in. No trades into that area. Pretty simple, right? And then if this area, if no triggers break through that line and they're capable of reversing the market and sending it down, that's what we're going to call a strong top. And if it goes down and it hits Fibonacci support, if it hits a divergence low line, if it hits those yellow 1-to-1s, once these price bars come in contact with the area, you're going to ask yourself, where are my triggers? If your trigger lines are above Fibonacci support, support may stop the market. Support may create an untradeable bounce. Support might instigate a fight that could go on for hours. And guys, every line that you reach is going to be a termination condition, at least for a split second. If this termination with no triggers through it reverses the market, we're going to call this a strong bottom. Strong bottoms and strong tops are the precursor for the highest probability trend trade you can take. So this is what it looks like when you're not going to trade into the area. Well, Mark, that's all fine and well. When can I trade? When small triggers and large triggers, both lines of both, get below support. Support behaves as resistance. Don't get caught up in the colors of the fibs. Trigger lines define. Small and large below support, support behaves as resistance. Your path is now clear. And your path remains clear until you hit the next area. Smalls and large get above resistance. Resistance behaves as support. The path is clear all the way until you hit the next line. And guys, this is really it for new users. Price reaches Fibonacci support. Where are my triggers? They haven't broken. The path isn't clear. Let me sit on my hands and be patient. Price reaches Fibonacci resistance. My triggers are way down here. Let me sit on my hands. Let me wait. It's either going to break or it's not, guys. Or there's going to be this ugly dance right on top of it for the next hour. Who knows? Let's go to the large chart. Actually, you know what? Before we do this, let's talk about one more look. Let's talk about the second look. Once you're comfortable. And guys, give me a yes in the room if you're with me. Price reaches, whoops, wrong one. If price reaches the area and the triggers remain above, let's sit on our hands and do nothing. If price reaches resistance and the triggers are below, let's sit on our hands and do nothing. Let's wait to see what the reaction's going to be. Once small and large get above the area, once small and large get below the area, the path is clear until the next area. Guys, this is the most basic form for brand new users. This is going to take you to your second trade, guys. 50% of my triggers have not broken through the area. The large triggers remained above. Well, 50% of my triggers have made it through the area. My small triggers have smashed through Fibonacci support. Here's the key. This look has to happen with odds favorable momentum, guys. When I have odds favorable momentum, rule number one has been met. The small triggers smash through, but the large triggers haven't made it. We very cleverly call this a 50-50 look. This could be called a straddle look, a one below, one above look. You could call it whatever you want. But what this means is that the fib, the 1-to-1, etc., has the, and let's go all caps, potential to break because of the momentum. It is not broken. It is not broken because the small and the large have not yet gotten through. Guys, I'm going to give you a plan to take this trade. This is your second trade that takes your chart reading and begins to recognize the potential of areas to break. You'll find that this is probably your most common trade. But until you get good at the simple, it is a termination, it is a clear path, this one may create problems for you. So, 3 options for the new user. Price reaches the area, triggers don't break it, sit on your hands and do nothing, no trades into that area. Small and large, clear the area, going off to the distance, guys. That path is clear until we reach another line. You may even find one of those little pullbacks. Get you an entry with that momentum. And then your second trade, the potential to break with odds favorable momentum. And I want you to see, even in this example, look at the dance that happens right over the fib. Look at the spike that happens right at the fib. And guys, this area never broke. The market ended up going up. So I'm going to give you a rock solid plan, but you've got to be good at it. You've got to go back and recognize these. So let's talk about it. Let's go left to right. No trades being taken, just pictures, right? Price reached Fibonacci support, even with odds favorable momentum. All my triggers remained above. No short trades, guys. Just kept you out of a loser. Does everybody see it? Watch this. Price pulled all the way back to Fibonacci resistance. All the triggers remained below. No trades into that area. Don't go long just because support held. You don't have momentum. You don't have a clear path. Rules not met. Someone in the room earlier said, man, that area finally cleared. Well, it didn't. The triggers never made it through. Termination conditions again. Guys, 90% of your day is spent waiting for advantages. 90% of your day is doing not a darn thing as you wait for the market to finally give you what you need to take a trade. Does everybody recognize that this was the potential to break with all that momentum, but it didn't? That's your 50-50 look, and that's a 50-50 look that failed. And now we're directly into Fibonacci support, and the triggers remain above, and I'm not going trade. And I want you to see something, guys. Crude oil has defined a range of consolidation through rule number 2. Crude oil has told you don't give your money away short or long or short or long. It's the rules that are going to keep you out of trouble, guys, but it's also the rules that are going to frustrate the hell out of you. Because there will be times when the areas are stacked. There will be times when you can't seem to get that clear path. And this is where you have to remind yourself, 90% of your day is spent reading indicators. 90% of your day is waiting for advantages. And what you'll find is that the difference between the most successful traders that I work with and the people that struggle are the people that can't seem to do nothing when the rules aren't met. The people that feel insistent that every move is their move, that every dollar is their dollar, that every up and down should have been an opportunity to find success. Guys, the futures markets trade billions of dollars every day. Billions. At $400 a day, you are in 6 figures. 400 out of billions. Guys, it's okay to do nothing. It's okay to take 2 to 3 trades a day. Has anyone in this room made 6 figures from working 2 to 3 trades a day, maybe 15 minutes a day of actual work? Some of you probably have, but it's not typical, guys. And this is what trading futures, this is what patience, what understanding patterns, what embracing advantages does for you. So you may hit support and have to sit on your hands. And then you hit the next level and you have to sit on your hands. And then you hit the next level and you're like, son of a gun. How am I ever going to get paid? You will. Be patient. Your trade is coming along and you will be solid enough to catch it when it does. Rule number 2 gives you the ability to see where the people in control are most likely to react, where they're most likely to enter, to exit, to take profits, to fight. Rule number 2 can help you define chop, define ranges, define consolidation, guys. 90% of your day is waiting for the advantages. 10% of the day will be taking trades based on those advantages. So that's rule number 2. Is everybody good with that? I mean, this is probably one of the best visuals. There it is. And then if you just back up, where did that huge move up start from? Support. Right there at support. Guys, you know where these areas are. The people in control know where these areas are. And all you have to do is scroll back for 5 minutes. Momentum breaks. Hits resistance. Look at the bounce. Weak triggers. There's your retracement. We're going to find ours. We're going to find our money inside of the billions of dollars that are being traded every day. So, large chart, strong triggers. And brand new users, let me say this real quick, and I should have said this earlier. There's a lot coming at you on day one. There's a lot of brand new terminology. There's a lot of looks that you're not familiar with. It's okay on day one to be like, what the actual heck is he talking about? It's okay. By day 2 or 3, it begins to click. By the end of the first week, you're like, all right, I understand everything he's saying. And you will know by the end of your demo that this works. You will understand that feedback is the key to success. You're going to see how we teach, how the software operates, and how accurate it can be. So don't get overwhelmed. Don't try to become a professional trader in 4 days. Work on your chart reads, guys. Momentum leads the way. It provides a market that's capable of pushing in the direction of the trend, that's capable of breaking key areas. It even covers some of the mistakes that new users make. Clear path, rule number 2, make sure that you have room to your profit targets. All of this happens on the large chart. And once the rules are met, you turn your attention to the small chart. You're going to define where it's most likely to continue. But before we go to entries, there is one time on the small chart when it's a termination condition. Only one time. If I have rules met for the high probability trend trade and I go to look for my entry and I see 3 divergences in the same price range, 3 losses of momentum from a low, cyan line associated with a negative number, magenta line with that negative number at the top of the pivot, guys, 3 divergences may terminate the trend. It becomes even more powerful with weak triggers. That lesson from rule number 1, and more powerful still. You guys that have been trading for a while will recognize that head and shoulders pattern. The third pivot is higher than the previous at a low or lower than the previous at a high. This pattern is showing the change that you can't see on a large chart. 3 losses of momentum in the same price range. If you get into the perfect trade, this may become a management opportunity. And if you're not in a trade, this becomes a red flag. Let's pump the brakes, let's sit on it, and wait to see what happens, guys. So, large chart leads the way, momentum. Large chart leads the way, clear path. When the rules are true, we're going to go define where the market is most likely to continue. You're going to do it with such precision that you are going to use a limit order. You're literally going to wait for the market to come to you. And you are going to wait at an area. Fibs, midbands, and yellow 1-to-1s can create a bounce in the direction of the trend. But here's the key, guys. Those areas need to be inside of triggers. So you're going to use a limit order to buy or sell a pullback, that little shove from the small crowd. You're going to do it at an area, fib, midband, yellow 1-to-1, and that midband, fib, or yellow 1-to-1 needs to be inside of triggers. And more specifically for the brand new user, inside of favorable large triggers, because there's a phenomenon that happens on charts that says price returns to large triggers. You see it all day long. Price returns to large triggers, guys. It returns to the large triggers on the small chart and the large chart. So what we've done is we've taken the large triggers from the large chart and superimposed them on the small chart, because price corrects to the triggers. And when you're large and synthetic are the large triggers from the large chart. When you're large and synthetic are one on top of the other, I want you to picture 2 snakes riding piggyback. It'll make you giggle. This is what we call favorable large triggers. This takes 2 separate correction points and puts them one on top of the other. It reduces the area where we expect the price bars to return. When you put an area, a fib, a midband, a yellow 1-to-1 inside of those triggers, now we have some place for the market to bounce. So favorable large triggers will reduce risk. Favorable large triggers will increase accuracy. Favorable large triggers let you know that the small chart price may return to the large triggers. And if I have 1-to-1s and a fib inside, these may produce a bounce in the direction of the trade. But the synthetic triggers are where the large chart may retrace. And I have a mid-band inside of there, and that may produce a bounce. So you're going to use the idea of large and synthetic areas within to create a window from the highest point of support to the lowest point of support for a long trade, from the lowest point of resistance to the highest point of resistance for a short trade. This red box illustrates where I expect price to return in the areas that I anticipate making a bounce, guys. And this is how you are going to pinpoint your entries with all sorts of precision. So when the large chart says up, let's do the picture. When the large chart has odds favorable momentum, rule number 1 is met. I go to rule number 2. When the large chart has that clear path, and you know what, I'm just going to keep it simple, clear path. It's time to go to the small chart. It's time to wait for the retracement, for that small crowd to fight. Guys, that fight begins with a reversal bar. This reversal bar signals the beginning of the pullback. The reversal bar is not your entry, but rather the reversal bar is going to have you looking for those triggers. From the large synthetic, somewhere from the top line to the bottom line, guys, this is where I expect price to return. Is everybody with me so far? We're defining an entry. From the top of the triggers to the bottom of the triggers is where I expect those price bars to go back because price returns to triggers. The areas inside, mid-band, may produce a bounce. Yellow 1-to-1s may produce a bounce. So we're creating a window from the highest point of support to the lowest point of support, and that blue shaded area represents where the market is most likely to continue. Where the small crowd is most likely to lose. Because of the odds favorable momentum, because of the clear path, you're going to activate a limit order at the top of that window, at the highest point of support. And if the small crowd has it in them to push back to your entry, you are inside of that trade. You are in a high probability trend trade. But you're in it with the understanding that price may push all the way to the bottom of the triggers, which means that anything in here, you've got to train yourself to not panic, guys. And trust in the methodology eliminates that panic. And then if price gets below these triggers, our advantage is gone. The edge is gone. We no longer want to be in that trade, which is why any area on the wrong side of the triggers is not a part of the window. Any area, any line beyond the bottom of those triggers in a long trade is not where we want to be. And that's typically going to be your first stop. In a short trade, everything says down with odds favorable momentum on the large chart. The path is clear on the large chart, or at least has the potential to break. You guys wait for the reversal bar on the small chart. The reversal bar is not your entry. The reversal bar has you looking for triggers, large and synthetic. You can create a box from the top line of the triggers to the bottom line of the triggers. It doesn't matter which is which. We expect price to return to these triggers. And then you're going to search for areas within. And guys, there is one line inside of favorable large triggers here. It's a mid-band. Your limit order goes a tick or two below that mid-band. And this is where you start to hope, wish, and pray that the small crowd has it in them to get you to your entry. This becomes the entry for the highest probability trend trade short. Any area beyond those triggers, any line on the wrong side of those triggers is not a part of the equation. Once you get above the correction point, you no longer want to be in that trade. This is where stop placement goes. Hong, it's dependent on the day. I've seen days with 1 or 2. I've seen days with 10 to 15. It really just depends on how the market is moving. It depends on how strong one side of the equation is able to push the market. And this is why, Hong, I tell you, this is your first trade. And this is why I say that 50-50 trade is probably going to be the trade that you take more than any other. All we're doing right now, Hong, is building a foundation so that you can read indicators. This will not be your only trade. I will not shackle you to this trade. I will not insist that you only take this trade. This is the trade, this is the look that, first of all, teaches you to manage. It teaches you where the market shouldn't go. It teaches you to recognize momentum. It teaches you to understand termination conditions so that you can build your own plan based on your ability reading the indicators. So when I tell someone it only does it 2 to 3 times, they start to panic. Well, hell, what if I'm in the bathroom? What if I'm making a sandwich? Guys, there's so many more opportunities. This trade teaches you to recognize advantages. You will find ways to capitalize. Your initial stops are based on your ability to understand where the market is most likely to continue, guys, because once you can pinpoint this, you know that it shouldn't go beyond the triggers. Your initial stops are 4 to 5 ticks above all the trigger lines, 4 to 5 ticks below all the trigger lines. But here's the magical thing. With all the momentum, with that clear path, you're more likely to get a reversal bar in the direction of your trend, whether it's up or down. Your initial stop placement, and I'm going to put this in a plan and hand it to you. Your initial stop placement is 2 ticks above the reversal bar, 2 ticks below. So you're going to reduce risk before you ever take profits, guys. But you have to understand that first piece of the puzzle. My classroom, the first hour, is dedicated to the easiest way to take this trade, guys. It's important that you understand this. My first hour is dedicated to giving you the best of the best, the highest probability, the easiest to capture. Favorable large triggers is the easiest one, guys. They're one on top of the other. There's virtually no space for areas. It's pretty easy to pinpoint a trade when the triggers look like this. But here's the reality. This is not always the look. You're going to have rules met on the large chart. You're going to be ready to enter the market. And when you go to look for entries, you're going to notice that your trigger lines are split. They're divided. They're away from each other. Guys, this happens. 2 spots where price may return. This is why it's so important that you understand that concept. Price may return to the large triggers. Price may return to the synthetic triggers. Is everybody good with that idea? Give me a Y if you're okay with that. Once you understand this, you understand stop placement. Once you understand this, you know how to calculate risk. So there's 2 areas that may create a bounce, guys. Remember, it could be a mid-band on its way to the synthetic triggers. It could be the line inside of the synthetic triggers. You know that your stop goes below the triggers. Are you willing to take the risk from way up here? Are you willing to miss the trade by wanting it to go down here, guys? This creates indecision. Understanding the very basic concept that it may go back to the triggers, that it may bounce off a line. Guys, this is going to be a pretty common entry for you guys. With this indecision, with this level of risk, there's a lot of you in the room that wait for a confirmation bar, that wait for a reversal bar in the direction of the trend to enter the market. You're saying to yourself, it could go here, it could go here, it could bounce here, it could bounce here. Let me force the market to go in the direction of the trend before I enter. Because what does it do? It establishes your risk 2 ticks below the reversal bar. It doesn't guarantee a win, but at least this way you're not putting $700 of risk on a trade. You're getting in with the momentum, you're getting in with the clear path, and you're getting in as the market moves in the direction of the trend. Does that make sense, everybody? This is a little opportunity for you to take advantage of when it's not perfect. And that's when I say confirmation becomes important. When the entry isn't perfect, a little confirmation goes a long way. Flip side of that though, guys, if it's perfect, getting in at the area reduces risk. Getting in at the area maximizes profit potential. I see a lot of people get hung up on these confirmation bars, and even on the perfect trades, they're giving up 7 or 8 ticks. Well, I need confirmation. No, at this point, the pattern has been proven to win more than it loses. The entry is ideal. Get in at the areas inside of favorable large triggers. This is how you're going to study, guys. This is how you're going to prove that I'm full of beans. Good luck. When your large chart has momentum, when your large chart has a clear path or the potential to break and you see one of these tails, go circle it. If that circle lines up with areas inside of triggers, guess what? High probability trend trade. Guys, you're committing this look to memory. You don't need to be in a trade to be able to circle a tail. You don't need to be in a trade. You do have to go back a little bit to find a trade because the market straight lined both directions. Let's go to, let's go to the S&P real quick. Goodness gracious, did I delete? Nope, there it is. We'll do this one right here, guys. Just for grins, let's see what happened. Momentum, circle a tail. Pulls right back to the area inside of the synthetic triggers. Holy smokes, guys, that happened 5 minutes ago. 5 minutes ago that happened. Was it a high probability trend trade? No, it only had the potential to break. But once you're good at reading your indicators, guys, you might find a way to capitalize on this look. That's okay. You didn't miss it. It wasn't yours. That's the thing, guys. It's impossible to miss a trade. It just wasn't yours. If you weren't in front of the computer, if you didn't do your analysis fast enough, it just wasn't yours. Guys, there's momentum. There's those darn split triggers again. One area down here, one area up here. This is exactly what we were talking about. If you waited for the confirmation bar, if you waited for the reversal bar, your risk was established. If you got in low, you knew exactly where your stop had to be. If you got in high, you knew exactly where your stop had to be. You were going to put in a sell order at that 1-to-1? But guys, two options, a little indecision. Risk is always the same. Confirmation helps. But if you took this one, look, you made money. Congratulations, that's your look. Tails all day. So guys, that's my first hour. That's my first hour every day. We talk about advantages. If you're brand new right now, you're thinking to yourself, and guys, pardon my French, you're like, holy shit, this is a lot, right? It's okay. Hong, do you remember when you thought that on day one? Well, you probably didn't say the S word because you're better than me. On day one, guys, it's like drinking from a fire hose. I know that. I understand that. I've had day one myself. This is it. That's us. Day one. Hong at the area inside of triggers. I want you to embrace that language, guys. Area inside of triggers. I want you to say it out loud. I want you to write it on your charts. Hong, area inside of triggers. 1-to-1s inside of triggers. It was the only option. Wayne knew it. He was going to put a sell order there. He chose not to. But do you see how... Watch this. I love language, guys. I'm a huge fan of language. And I'm just going to take a picture of this one. And if I know my entry comes from an area inside of triggers... Hong, how many options do you have for the entry? There's no areas inside of these triggers. Technically, this area is below the trigger. That's the only area inside of triggers. And what happens is language directs you to the perfect entry. Does that make sense? So guys, I think it's imperative. I think that it is the most important thing you can do for yourself is to understand the language of the rules. Understand where that entry comes from. Say it out loud and type it on your charts. And eventually, Hong, you'll never miss the entry because you're literally saying to yourself, my entry comes from the area inside of favorable large triggers. How about this? Instead of using the timestamp, how about at 57.80? Right there, 2 ticks below the resistance inside of favorable large triggers. And you're absolutely right. It's right around that 9:46 time. So you would have had a limit order waiting, Hong, right here, couple ticks below. And your initial stop would have been up here, 4 or 5 ticks beyond the triggers. And then once you got a reversal bar, Hong, you had maybe $50 risk on that trade. And it absolutely dropped with all those advantages. So this is what you guys have to learn. You guys have to be able to put it all together in the course of a minute or so. And sometimes when the market's cranking, you've got to put it all together inside of a matter of seconds. Potential to break with all the momentum, pulled right back to the mid-band inside of triggers. Son of a gun, I can't make this stuff up, guys. Is anybody getting paid short right now before news, or did you say to yourself, I'm going to wait for news to print because news may create an untradeable bounce? And guys, that's my first hour every day. So if you're brand new and you're like, what the actual heck? It's okay. I'm going to say it again tomorrow, and I'm going to say it just as loud and just as strong. But if you really want to get to where you want to be, ASAP, guys, you have to recognize some looks and patterns. You have to understand the language. So I encourage you go through this drill. Take 25 pictures of strong triggers. And then understand what it means to not have that advantage. Take 25 pictures of weak triggers. Clear path, terminations, entries. But guys, the task isn't just to take pictures, because most of you will ignore the pictures. Most of you will never go back and look at the pictures. I know, I've been that guy. So take the time to annotate. Why are the triggers strong? Describe the advantage. Why is that advantage in place? Why is it strong? Why did I enter? And what happens, and this is a great example right here, if you take the time 25 times to type out my entry comes from an area inside of triggers, you're creating a connection between the look and the rule. You're creating a link between your brain and your eyes and what your eyes are telling you, what your indicators are telling you, guys. So this is the easiest way to get to where you want to be. We're all brand new. Hell, Mark, I don't know what momentum looks like. I'm on day one, you yahoo. It looks just like this. This is the high probability trend trade checklist sheet. This is always the same. Very nice, Wayne. Momentum is always momentum, guys. It's momentum on the large chart, the small chart, the range chart, the day chart, the month chart, the tick chart, the Renko chart, the minute chart. Momentum is momentum is momentum. And once you can recognize momentum, you have the first advantage. But you also want to know what it looks like when it's gone. You want to remind yourself that if price reaches an area, ask yourself, where are my triggers? And if they're not through, I don't have a clear path, rule number 2 is not met, maybe I shouldn't be looking for a trade anymore. This is only the potential, know what it looks like. This is a clear path, and this is the only time it's a clear path. It's not a clear path when the fib turns blue. It's not a clear path when the price bars get above the area. It's a clear path when small and large get above, because that puts your moving averages well beyond the decision-making point. In your entries, areas inside, all caps, favorable large triggers. Exactly what it looks like, exactly where your limit order goes, in the areas that are nonsensical beyond those trigger lines where you don't want to be anymore. Guys, go through this, study this, use this to police yourself on the pictures. And then on the second page, it's a checklist. This is your entry checklist. This is the checklist that you should have printed out in front of you during the live market. This is the checklist that you should have printed out in front of you as you backtest and go back and try to prove me wrong. This is the checklist that you should have in front of you when you're using market replay, because you can pause market replay and make sure that the rules are met. Ladies and gentlemen, I have never in the history of this checklist had anybody mark yes to all of these and do worse than 70%. And the guys, the engineers that back tested it over the course of a year, his number was 83.2 when the rules are met, guys. So I'm going to drop that in the room, and all of that leads you up to what I call the KISS plan. So brand new users, you don't have to write a trading plan. I'm going to give you one. Experienced users not finding the success that you wanted to have, you don't have to create your own ideas. Go back to the ones that have been proven to win. This KISS plan, this simple plan, is designed to be a stepping stone in your learning journey. The high probability trend trade is not your only trade, Hong. That's why we don't worry about it only happening 2, 3, 4 times a day. There's going to be so many opportunities outside of it with those 50-50 trades, with momentum trades, with high volume area trades. Hell, Wayne said that he just made $450 on the short when everything was strong and going down. That's pretty good. Wayne's already in a 6-figure range at the end of the year if that's the best he does every day. Guys, this is a stepping stone. It's designed to optimize your chances of success with the high probability trend trade. This is designed to help you win more than you lose. This is designed to create confidence. This is designed to teach you to read your indicators. Most of you won't need more than a week to get these basic concepts before you add in the second trade. But it's going to be through simulation, through study, through class feedback, continuous practice, guys. You will create a plan, and that plan will be based on your ability reading the indicators. And I'm going to tell you right now, people tell me all the time, Mark, I watched the videos. Mark, I listened in class. I'm like, yeah, but you're not practicing. You're not simulating. You're not asking for feedback. You haven't done any study. Guys, you can watch Tiger Woods hit balls all day long. If your mechanics suck, you're not going to shoot 65. You can watch Michael Jordan slam dunk. It doesn't mean that you're going to be able to. So really get in and get your hands dirty. But most importantly, ask for feedback, guys. You will create your own plan. You will not be taking just the high probability trend trade for long. Your simple plan for consistency is don't fight the large chart, guys. Don't fight the large crowd. Don't feel like you have this ability to predict what the market's going to do. You will never predict what the market is going to do. So your path of least resistance is to go with the direction, to go with the momentum, to go with that clear path. And then when you look for an entry, make sure your entry sends you in the direction of the large crowd. Guys, it's like a lazy river at the MGM. You can either sip pina coladas and enjoy the day, or you can try and walk against the current, wear yourself out, too tired to go get a steak and gamble that night. Define your entry. Know why you're going to get into the market. Know where you're going to get into the market. And guys, great entries create manageable trades. Great entries reduce risk. Great entries increase profit. So your entry needs to be at that area, inside of favorable large triggers as a brand new user. The point where the market is most likely to continue. The point that defines your risk. The point that gives you the highest advantages. And once you're in this trade, once your stop is up here, 4 or 5 ticks above those trigger lines, guys, there's only one of two things that are going to happen. You're either going to get stopped out. Anything that wins 70 to 80% of the time, guys, is going to lose 20 to 30% of the time. Every 10 trades you take, you're likely to get the stop hit 2 or 3 times. It's a normal part of a positive equity curve, guys. Losses are okay. Make sure that they're the right losses. And then once you take that trade, you're in. If you don't get stopped out, all that momentum in a clear path is probably going to give you the reversal bar in the direction of your trend. At the time of the reversal bar, your management is very mechanical, guys. It's very if-then. We're learning how to reduce emotion and we're learning how to get paid. You're going to reduce risk 2 ticks above that reversal bar, and you're going to sit on your hands. You're going to roll back from your desk, and you're going to say, you know what? The small crowd's either going to get me. Sometimes they do. It's cool. I'm not worried about it. Or with all of those advantages, it's going to hit my first target. Your first target, target number 1, is $100 away from your entry. $100. And most of you are thinking, Mark, I can't make a living off $100. Well, it's just a fraction of the day. It's a moment, right? None of you would step over a $100 bill if it was on the sidewalk. Why would you step over it here? Learn how to get paid, guys. That $100 creates confidence. That $100 feels good. That $100 dries up your sweaty palms. It gets rid of those butterflies in your gut because you're going to move your new stop to break even. Amen, Ron. Base hits pay bills. Base hits pay bills. Go watch Moneyball. One of my favorite movies ever. Guys, you are out of your first contract. Ninja Trader has told you that you're a badass. Children begin singing songs about you, and you have no risk on this trade. And it's this no risk that's going to get you to hold for the second target. You have nothing to lose and you've been paid. This may not be your best stop, but guys, the same way with your entries. You will create a plan based on your ability reading the indicators. You will change your management plan based on your ability reading the indicators. But if all of those advantages come together, if you don't get stopped out break even, your second target is only $200 in the distance, guys. That's it, just $200. This can happen inside of 8 to 10 seconds sometimes. The right trades go fast. And you're out, you're done, $300 in the bank. And it doesn't matter what happens next, guys. $300. Ron said 4-second trade here. Ron takes the idea of a clear path and momentum, jumps in, jumps the hell out. 11 ticks, guys. And on the ES, that's like $125 in 4 seconds. Do that 4 times a day. You're making 6 figures. So the idea isn't to catch every move. It's to catch the best moves. The idea isn't to hit a home run every time, but rather to learn how to get paid, guys. And if the best you do is one high probability trend trade that goes the distance each day, that's a $75,000 a year. And that's what most people forget, is that you don't have to make a lot of money every day to make a lot of money. $500 a day is $126,000 a year. $1,000 a day, and you're going to find that that's not too hard to hit once you have a plan. $250,000, right? What happens when your 2 contracts goes to 4 and suddenly it's $2,000 a day? And guys, it's very doable. So don't feel like you have to make it all. If it keeps crashing, Wayne, do you go through this after the crash? Let me help you real quick. When it crashes, do you stop for a second, recollect, and get rid of the cache and tick, get rid of potentially corrupt data? Do you get rid of the temporary folders? Do you go through and knock out the recovery folder? That's one of the easiest ways to get it back. If that doesn't work, if it still crashes, I build new workspaces. And I know that sounds like a pain in the butt, but if I can't get NinjaTrader to stop crashing, and guys, it happens sometimes. This is my second go-to, Wayne, if those things don't work, because there may be something corrupt in the workspace. And guys, I would encourage you to practice deleting your workspaces and rebuilding. It takes me about 10 minutes to completely reinstall my software. And you'll get to that point too if you do it a couple times. But that's my path, Wayne. First, I get rid of all the basics, and if that doesn't fix it, I'll rebuild. So guys, learn how to get paid. Can't stress that enough. That's the goal of trading, is to get paid. And there's 2 things that you have to know before you ever go live. And notice that I say that, before you ever go live. If you're on Simulator, guys, take everything you see, post it in the room, let's talk about it. But when you go live, when you've got a skin in the game, you have to know why you'll enter a trade. You have to know what the rules are. You have to know what the looks are. And guys, your rules have to be, they should be patterns that have been proven to win more than they lose. Because if they haven't, why are they in your rules, right? That's where the high probability pays dividends. But you also have to know why you'll exit. And if everyone in the room decided to be honest at the same time, I guarantee 99% of the room would raise their hand and say, you know what, Mark, I really did focus on those entries, but once I got in, my guts took me out too soon. My fear took me out too soon. My greed made me hold longer than I should have. I didn't have an exit plan. Does that sound familiar to anybody but me? So you have to know why you're going to exit. And guys, I'm going to tell you right now that your exit conditions are probably going to be unique to the type of trade you're taking. So if you're in a high probability trend trade, your KISS plan, those rules are in place to get you out of the trade, to tell you when it's time to move stops and when it's time to take targets. And then as you grow, there's other options that may affect your management. If you're in one of those 50-50 trades, the rules are different for entry, the rules are different for exit. So now you've got to memorize both, know which trade you're in and how to manage it. Do it with a third trade. Now you've increased it to 3 trades where you have to know the rules and the exit conditions, guys. The more consistent in following the rules you are, the more profitable you're likely to become. And it's the process that yields the results. It's not your desire to win or your need to pay bills, guys. The process yields results. Great swings create great golf scores, right? Straight arms create accurate free throws, so on and so forth. Rules are designed to remove the emotion, guys. You'll never know what's going to happen next, but if you know that the pattern creates more wins than losses, you can confidently take it, and really you'll get to the point to where you don't care what the outcome is. So this is my first hour. Obviously it was an hour and 13, and when I promised you that I would give you everything that you need to be successful, I meant it. So what do you have? You have the rules. You know exactly what they are for the high probability trend trade. And now I just dropped in the room, you have Chart Reading 101. And that's designed to give you the ability to recognize the rules being met quickly without hesitation. You've got the high probability trend trade checklist now. And I put this in PDF form so you guys without Microsoft can still have it. So now you know exactly what it looks like to have your rules met. And you have a checklist to police yourself. You have rules to write on your chart every trade that you take. You now have the KISS plan. And the KISS plan is designed to optimize your chances of success with a high probability trend trade. And your ability to understand the high probability trend trade opens the door for the 50-50. Using strong tops or bottoms opens the door for the 50-50. Understanding momentum, recognizing divergence, sets you up for that second trade. Guys, this plan is designed to optimize your chances of success on that potential to break. When you say, is this an issue? Is what an issue? Oh, the times aren't the same. It took me a second. Nope. So Hong, do you remember when I said that the small chart gives you an X-ray of a large sharp bar? Watch this. If I extend this circle around this one bar, I want you to see this circle extends from about 942 all the way to 950. So if inside of this one bar, you get so much indecision that the market does, let's find an example, that the market does one of these. This may take 15 minutes, but you're still only on one bar here. So this is why I say don't try to line up the timestamps, but if you're curious about an area, draw a circle around it, and you'll be able to tell on the small chart exactly where the circle happened, because using price is a better indicator than the timestamps because these are two very different charts. Does that make sense? Great question. And I actually get that question about once a week, so I'm glad somebody finally asked it this week. Where was I? I don't even know. I gave you guys Chart Reading 101. I gave you High Probability Trend Trade. I gave you the KISS plan. I'm going to give you the daily goals. I'm going to give you the exit conditions sheet. And then I'm also going to give you my PowerPoint in PDF form. All the pictures that I used to teach in PDF form, guys, have just been given to you. I've given you the spreadsheet so you have your trade journal, something to study. That spreadsheet includes all of these pictures, entry sequence for long and shorts, that very mechanical management, and it gives you a great head start on your 101 stuff, guys. I'm telling you right now, the potential with trading is millions of dollars. You've got to do some work to make it. Shadow, you hit buy instead of sell when you started off, done it. Down 240 before you could cancel. Came back to 590, went back down to 60, chilled and it came back to 390. So what I heard is you made a mistake and you stayed in the trade and you just hoped to hell it worked out, right? That's okay, man. That's half the fun of being brand new. Half the fun of being brand new is going through all that, guys. Take a picture and let's see if your sell was the right sell. And sometimes we get lucky, guys, but my goal for you is to always have the advantages. Oh, jumped in and doubled down? I guess it's a good thing that it won. Nice, Shadow. Show me the pictures, though. Pix is in your name, but you haven't shown me one. Guys, that's how we talk. That's how you get feedback. That's how you're going to be able to know if you're reading your indicators right. So every one of you got Capture software when you downloaded your software. It was given to you. If for some reason you don't want to type TechSmith here and find it, you can reload it. Here's the link. Make sure that you have this because this is how we're going to talk. Whoops. This is how you're going to get feedback. This is how you're going to show me where you're entering, where you're exiting, why you did what you did, guys. So with this Capture software, when you hit that big red button, if you only click or hover over one chart, it only gives you one chart of information, guys. We're two chart traders. And I want you to see something. I have almost 2 hours of large chart information here. Guys, I don't need all that to give you feedback. It's okay to cut it short. So left click, show me the last 10 or 15 minutes on the large chart. Show me where you entered, where you exited on the small chart, and release. And what that's going to do is it's going to give you your picture, your captured image. And there's all these cool options where you can take arrows and callouts and shapes, and they're all click and drag. If I left click and drag an arrow, I can make it long, short, up, down, left, right, whatever. Maybe I put it right there. I can put a shape somewhere. I can put a callout. And this callout is how we discuss. This callout is you telling me what you did and why. I tell you what I see, and if your read was correct, and if I see a way for you to do it with less risk or higher reward. So what I'm doing is I'm taking my 5 years of chart reading every time you post in the room, and I'm just giving you my 2 cents on it, guys. And I won't tell you took the wrong trades, but I will tell you that you broke rules. I won't tell you that you shouldn't have been in that trade, but I will tell you that you forfeited advantages, because my goal is for you to be successful. And success comes from following a solid plan. The first level of cleaning, here you go, let me give you that, Wayne. So when you present in the room, avoid the temptation to get butthurt if I tell you that you broke a rule. And some people do, and they just stop trading. You can't be that thin-skinned, guys. You have to be open to feedback. You have to be open to constructive criticism. Remember that your trades don't affect my livelihood. Not one bit. I'm not in sales. My goal is to teach you how to be the best you can be at this. And I love the feedback, and I love the talk, and I love giving you guys everything that you need. That's the wrong one. Right here, Wayne, NinjaTrader best practices. Scroll down to the third picture, deleting cash and tick, getting rid of temporaries. This will talk you through all of it. But this is my morning routine every morning. I go through this every morning to start with fresh data. And then if you have any questions or you need anything, just let me know. I will help you. But guys, that's it. That's the first hour and a half. My throat is dry. And then once you have this, I'm sorry I didn't do this. Hit copy and drop it in the room and wait your turn. Because I will get to every picture. I will get to every question. I'll make sure that we answer everything that you have questions on. And guys, the cool thing is that if I tell you something, if I say, hey, maybe not your best long, and you're like, but, and you want to fight me on it, that's totally cool. Fight me on it. But fight me on it with rules, right? I will make mistakes every now and then. Absolutely, Gil. So when you take a picture with TechSmith, where were you 3 minutes ago? Once you have this, Gil, you can do everything. But it's the call out button. Click and drag. Oh, that happens. I do that too sometimes. Left click and drag down like this, and it'll give you your box, and you'll see that little cursor in there. That's where you start typing. Some of the things that happen is I've seen people do this where their ink is white and their background is white, and it doesn't work, obviously. But if you make it black and white, you can do that. Go for contrast. You can do the same thing with arrows. You can do the same thing with the shapes. Click and drag everything. And if you wanted a different color, make it a different color. But guys, the better the information you give me, the better the feedback's going to be. The most important thing you can do is talk to me about those 3 rules. Tell me what you saw. Write the rules on the chart. Tell me what your read was so that we can talk about your read. And what you'll find is that within 3 or 4 charts, 5 charts, I'll recognize your thing. So brand new users, by the time you give me your 5th chart, I'm going to understand if you jump in early, if you hold too long, if you fight termination conditions, and we're going to work together to correct it. We're going to work together to get you the best of the best. So I'm going to take 5 minutes. I encourage you guys to take 5 minutes. Guys, is it a broken path or only the potential to break? What do you think? I like to leave with a chart read. 50-50, potential to break. I've got one set of triggers way down here. I've got one set of triggers way up here. Remember when I said if it just isn't perfect, it's okay to insist on confirmation, Morgan. If it's not perfect, it's okay to force the market to give you a reversal bar in the direction of your trend. And if that's what you did, ladies and gentlemen, you just avoided a loser on a medium probability trade that isn't coming from a strong top or bottom. So divergence is only one piece of the puzzle, Morgan. You've got to string it all together, right? And it takes time to do that. So I'll be back in 5, guys. When I come back, everything that I do will relay around momentum, clear path, and entry when I talk about your charts. Go stretch your legs for a second. I'll see you in 5. Wayne, that's what I'm talking about. Little Miata. Very nice. I'll try and find a picture of me. I know I've got one or two pictures somewhere from my racing days. We'll swap photos. All right, guys, so here's what I'm going to do. I'm going to scroll to the top of the room. The race was yesterday? Nice. I'm going to scroll to the top of the room, and I'm going to start looking for pictures to click on, guys. And I'm going to go back to every picture. We're going to talk about advantages. We're going to talk about disadvantages. We're going to look at entries. We're going to look at exits. We're going to start with Joe. He actually doubled up on us here. So the first picture of the day, guys, odds favorable momentum. There was a clear path, he says, when he had it. He takes the pull back to the area right inside of triggers, and it doesn't work. And this is one of my favorite things. Trade did not work out. Hitch up my buckle for another trade. Joel knows that when he can mark yes to each of these, he has a trade that typically wins 70 to 80% of the time, which means that 20 to 30% of the time, he's going to take a hickey. And Joel, the only challenge on this one, or the only opportunity that I see, is that you took the perfect entry, and with the reversal bar, you could have had maybe $30 worth of risk on this trade, but instead, you kept it in place up here. So it's okay, guys. It's better to lose 40 bucks and take it twice than it is to lose a couple hundred. Minimal losses. Great trade, though, Joel. And then this one is one of those, hey, I'm going to anticipate a breakout because of momentum. I'm hoping everything goes up. And then, Joel, the only note that I had on this one is you traded into this fib. You let this fib clear, but you traded directly into this one. Just a little bit of patience. It'll cost you a couple bucks. But, man, when that path is clear, there's nothing to create that bounce the same way this one did. That potential was here. Two great trades, man. Morgan, everything says up. The path is almost clear. 2 ticks above the highest point of support inside of favorable large triggers. Great entries create manageable trades, almost no risk. Pansied out early because this is my first trade using Trade Copier. Can I address that? A trade copier shouldn't affect you being scared. So let me do it this way. If you're not so confident in your trades that you're going to take them and let them run to fruition, why are you mirroring accounts? Why are you mirroring your fear? I'm scared shitless on 1. Here, let me see if I can compound that into being terrified on 10, right? Just throwing it out there, Morgan, something to think about. Not trading advice, just an observation. Perfect look, awesome entry, everything's perfect, but you don't trust it wholeheartedly yet, so you cost yourself money because now you're letting your fear magnify across multiple accounts. Is my from the sideline observation. I reserve my right to be wrong. Been married a long time. I'm good at being wrong. But something to think about. If you change your plan because of a fear of loss, right? So wouldn't it make more sense, Morgan, to test your copier on Sim? And make sure that it copies and does what it's supposed to do? Just a thought. All right. It's the Jen show for a little bit. Guys, I love Simulator. And you guys have no idea how much time I spend testing trades, looking at patterns, working on different management things. And the one thing that I can tell you, without hesitation, is that if I put on 1,000 lots and try to buy when everything's going down, and I lose a simulated $11,000, couldn't care less. What's the lesson? Don't try to go long against everything going down, right? And that's why, guys, keep it simple. Take two. Mess everything up on sim. Make all the mistakes on sim. Have all the bravado on sim, and then follow rules when it's live. All right, Jen, you have odds favorable momentum. Coming from a bad bottom, you let it clear the mid-band, and you didn't just jump in. You hesitated and waited for it on the way back up. This is your new thing. And you had 57, you had 110 ticks worth, you made $100. Beautiful trade. What a great trade, Jim. Everything says up, the path is clear, the momentum is strongest, and you say, I'm just going to take $100 and get the heck out of the trade because it's a momentum-based trade, and momentum doesn't last forever. It makes more sense to take a base hit. I love it. Odds favorable momentum. The mid-band held. So did support. So did support. So did the one-to-ones. But I love that you're focused on the mid-band. 4 different areas held. Triggers didn't follow. Gap theory. Sends it up. And here you have odds favorable momentum. And it looks like it's probably a clear path. This is one of those ones where maybe after the fact it doesn't look like it. But Jen, this is one of those times where if you did have odds favorable, if you did have a clear path, the difference between the correct entry and your entry is 3 or 4 ticks. There's a time for confirmation, and then there's a time for utilizing these areas. I firmly believe that. And people think that confirmation is going to guarantee a winner, but what it did is it actually added a little bit to your loser there. And this is one of those times that you didn't need confirmation. Does that make sense? Not only Jen, but everybody. Waiting for confirmation sometimes is outstanding when things aren't perfect, when those triggers are split. But if you got odds favorable and a clear path, I love that area. I'll take a 5-tick hickey, and you turned it into a bigger hickey. And then, Jen, I gave you that little printout. One of the patterns that people change and add into their management plan, 2 divergences, whatever, it's a high probability, everything's good. The lower divergence, very often, I'll take an exit and I'll insist on a reversal bar to put me back in the trade. And I know full well that with this look, I will re-enter with a reversal bar. This is one of the patterns that may work its way into your management plan eventually. And I gave you a little handout for that. Odds favorable, everything is screaming up. You go for the momentum trade right into the one-to-ones, and I don't know how these react on gold. And then when momentum fails, you say, wait a minute, that's the perfect trend trade. Holy smokes. Let me add on. And this is another one of those times, Jen, where it would have been appropriate to use the area instead of the uptick. Not knocking your plan, but when it looks this good, I like the area. I reduce risk. It gives me more room to my targets, but you handled it beautifully, and you make money on it. Odds favorable, clear path, and it works out. Hold on. Odds favorable, clear path. Management opportunity. Odds favorable, clear path. It works out. I'm starting to see a theme here. And now we have what's called a strong trending market. I love this one, Jen. This is trusting the large chart, guys. I don't have it in me to do this. I don't mind admitting that. I can't do this. Jen, you did it perfect. Large chart has given over 30 bars in a row without a reversal bar. Large chart is broken through multiple areas without a reversal bar. Guys, this is where we start saying, hey, this market's really starting to trend strong. Jen has everything up. Everything clears the fibs. And she goes for that momentum style trade. Without momentum, though, Jen, that's the only thing here, is even though it's a strong trending market, it's that dashed look that I think creates the advantage. You're actually inside of the large triggers here. You have a weakness. And that weakness pushes you all the way back to support, with every trigger above and everything going up. So you hold, and that's a big hold. That's a terrifying hold to me. But that's okay. You're following the large chart. You're following the trend. You're following the triggers. You're following everything above. Rules of termination say support may hold, and you banked on it. And it did. It held 1, 2, 3 times on the small chart. And look at the large chart. And this is one of those great lessons. Large chart never blinked. Large chart never even hinted that this thing wasn't going to go up. And Jen had to sit through 349. Holy crap. Almost 45 minutes worth of shenanigans. But she let the large chart lead the way. And the large chart said, you know what? We're more likely to get to this fib than not. And Jen held all the way up to the fib. Beautiful. And you even added on, it looked like. Whew. I mean, that is, you made tea with the stop in place. And that comes from experience, and that comes from trust, right? In the beginning, we do this because we don't know better, because we hope. And then once you've got some repetition and you start to see this happen over and over, you do this because they have to come and get me. I know where the market shouldn't go. That's where my stop is. And I'm going to go make tea. And if they get me, they get me. And if they don't, I know exactly where the market is likely to go. And that's where the profits lie. And Jen, courageous is the word I'm going to use. I don't have it in me. I don't have the testicular fortitude to hold through all that. When my momentum trade fails, I'm out. I'm waiting for the next best. Great job, though, Jen. Great job. Great job having confidence in your large chart. Great job letting the large chart lead the way. And man, I put this in the room. I like this picture. Guys, most days the market does this all day long, up and down. There's going to be big moves. There's going to be small moves. There's going to be fast moves. There's going to be slow moves. You have to find your move. And that's really what this classroom is designed for, is to help you find your move, to help you look at a couple advantages, and then you make the decision. Is the risk worth it? Is this my trade? Is this my look, guys? And every move isn't your move. Every dollar isn't your dollar. Every up isn't your up, and every down isn't your down. All right, Pete comes in. He says, there's that strong trending thing, 30 in a row, breaking areas. Everything says up. And Jen, he took profits on one. I was looking to see if he took your same entry or sat through it the way you did, but he's up here somewhere. 63. So you're trading to trouble and exiting, and this is pretty cool. Took me a second to see if you guys took the same trade. No, it's just different. Pete he trades to trouble at 85, so he's all the way up here. He trades to the fib, and then he exits, and he takes all his profits. And guys, this is such a great lesson. Pete says, this line can stop the market. Let me get paid. And he goes, oh, it didn't. Let me get back in and take it to the next line. And this is pretty cool, guys. You see all the trouble spots, trade to them, get paid, trade from them to the next one, get paid. Quick grand. That's not a bad way to start the day, Pete. Great job, dude. And when I see you guys respecting these lines, when I see you guys getting paid at lines, forcing them to break before you take the next trade, it's a representation of your experience, of the time that you put in on the market, understanding these patterns a little bit. Looking for the next one. Steve Diego said that he met his daily goal, and that was at 9:03 a.m. Central. Everything says up. The momentum is strong. He jumps in when he clears the fibs and gets out quick. 2 contracts off at 200. Base hit. Nice job, Steve. Everything says up, and it's a clear path, and he says, you know what? I can grab a little snippet there. Let me make 400 bucks real quick. And then when it all breaks, he's got room to the target, runaway freight train, jumps in, jumps out. He waits for a slowdown on the small chart, even a little hint of it. And once again, what great trading, Steve. Trading from the areas, not into the areas. Such a great plan. All right, Cheetah. Price reverses and retests the low with two divergences. Not odds favorable momentum, but can possibly turn into odds favorable momentum. I love that. It's not a dog, but that cat could become a dog thanks to modern technology. It could also stop and drop, right? We love to talk ourselves into what could be. But let's count advantages. Termination conditions, right? Small triggers roll up. 3 divergences on the small chart. Large are up, synthetics are up. And you said that you say, this is telling me that this market may go up, but let me force it to create a reversal bar. And it didn't bounce off of divergence, Cheetah. It didn't bounce off of the divergence. This divergence didn't print till all the way up here. You were hoping that it would print. And you forced the market to go in the direction that most of your indicators were saying. And you put your stop right behind it. And you know what? Great job, dude. Is it a high probability trend trade? Hell no. But here's the part that concerns me. Why do you have a buy limit way up here? Is that left over from something else? It seems out of place. Another trade. Oh, okay, you scrolled back. Got it. And then it looks like it gave you a trend trade and a trend trade. So, nice. Good job, Cheetah. All right, let's see who's next. Paul Flowers. Paul's doing a little market replay work. I love that. Let's see what you did, man. Did this a couple times until I was happy with the trade. I like it. This is not a high probability trend trade. Get off of there. I'm trying to find it. There are multiple fibs in the way, but with momentum like this, got to take it. Well, I can respectfully disagree. You don't have to do anything. Oh, sorry. We're going to go back to yours, Paul. I miss a question. So, Cheetah, divergence prints. When divergence is true, it happens halfway through the third bar. This divergence didn't exist until about right here. So if you got in on the reversal bar, you didn't get in with divergence, but once it printed, it was a little confirmation for exactly what you were suspecting. But I've seen potential for divergence in the market rail like 100 points. So just a little clarity. It was true right here. It had potential, but it wasn't true until the third bar. So it actually didn't bounce off of it. Does that make sense? Cool. Paul said that because of the momentum, he had to trade in determination conditions. You're welcome, Cheetah. Because of the momentum, he had to trade in determination conditions. Oh, guys. Because of the momentum, I had to take that long trade in determinations. Because of the momentum, I had to take that long trade directly into a fib. Wait, because of momentum, I had to take this trade directly into the fib. And because of momentum, I had to trade into the fib. And because of the momentum, I had to trade into the divergence high. And because of the momentum, I had to trade into the fib. And because of the momentum, I had to trade into the fib. Do I sound like a pain in the ass nag right now? I hope so. I had to trade into a termination because of the momentum. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 times, guys. You don't ever have to trade into termination conditions. And that's kind of the point that I want to make here. Guys, momentum is great. Momentum is amazing. But these fibs can absolutely screw up your good time. And he traded directly into it. And it won. That's great. But rules are created. Rules are created because trading into an area loses more than it wins. That's how rule number 2 came into play. Trading without momentum tends to lose more than it wins. That's how rule number 1 became a thing, guys. So I'm not trying to be a pain in the ass, but I told you guys that I would do this if I see you taking chances. The momentum is great. A reversal bar doesn't confirm anything. It confirms that you're trading directly back into a termination. The simple idea of letting it break the area. Take the short right here on the correct side of things. Right? You're trading directly into 2 areas for a bounce. And guys, I can't stress this enough. When you say things like, got to take it, that's tough. So, all right. Paul Flowers not beating you up, but we just went back and saw 12 examples of where momentum into a termination condition lost. Guys, you don't have to take anything. Your best bet is always trading a pattern that has more advantages than disadvantages. Andy, weakening triggers. Yeah, that's still momentum, brother. Divergence. What are you confirming? Divergence wasn't true until here. We just had that lesson with Cheetah. So I know that Andy has a plan. Not a strong top, Andy, because triggers got through. Not a strong bottom. Absolutely nothing reversed. What this is, guys, is this is momentum to the downside. All indicators down. Everything says down. And Andy went long. And he made money. And I love it. But the divergence wasn't true. Right? Guys, you're going to get paid on these every now and then. Do you get paid on that one more often than not? Because that's the same look where Paul went short and won. And Andy went long and won. This may not be a repeatable pattern. This may not be long-term success. Maybe waiting for the divergence, Andy, a little bit. Waiting for something other than everything being against you. Shadow Picks. I just like the name. I know there's a story there. All right. Shadow, why, brother? Tell me why. Why did you go down on a 5-1? What made you say, let me jump into this market and hope for a big win? That's the part that I don't have here. And I also don't have a large chart. And that's why it's so important. Show me both, right? Show me both. Show me the big chart. Show me the small chart. I don't know what's happening on the large chart. I know there's a lot of areas there that you're trading into. These charts are tough for me to give you feedback on. Because I don't know. I just don't have any idea. Here's how you annotate a chart. Muser says, here's a weak top, Mark. Check it out. All my triggers made it through, but then they rolled and gave me odds favorable momentum. And this isn't a clear path. This is one of those 50-50s, Mark, which means that it only has the potential to break. He says he took a pullback to the 1-to-1s, right inside of the triggers, and hit his first target, and then got stopped out break even. No worries, right? $100 break even, who cares? And then the market goes down again, and it pulls right back to the 1-to-1s. Oh, that was your break even stop. But you re-entered and went down with it. So I like this one, Muser. This is Muser, right? So Muser followed the KISS plan. Muser said, check it out. My rules say get paid and go break even. And Muser, you're going to create a plan with a little bit of experience. And you'll say to yourself eventually, There is no way I'm going to put a stop just below resistance inside of triggers when my large chart looks like this. This is one of those instances where maybe 3 divergences takes me out, and then you get in on that great entry and write it down. It's a great trading, and great job following your plan. Nicely done. And then shadow picks, one thing we can do is we can go back and find these time frames in a little bit and see what the whole picture was for sure. I don't want you missing out on feedback. Andy, 50-50, split triggers, no reversal bar, stopped out. Yeah, and Andy, divergence will print on the large chart, not the small chart. Shadow picks. Hold on, we're going to do something real quick. Andy, just because it prints here doesn't mean that it'll print here. It's 2 different pivots, 2 different momentum. But that's that split triggers. That's that indecision. This is where reversal bars pay dividends. This is when confirmation is appropriate. So shadow picks, do me a favor. Every time you take a picture, I want you to click and drag on your large chart to your small chart. Get me both of those charts in the picture. Please, please, please. If your small chart's on a different screen, slide between the 2 screens. You can do it. But give me that side by side. There's too much that can happen going on both charts, and that's okay. I've got 3 separate screens. Check this out. This is how I know that you can do it. Because I can go from here all the way to here and show you guys 3 monitors worth of information. I don't want 3 monitors worth of information, right? You guys don't need to see the classroom. Hell, you don't need to see the YouTube thing. That's what I need to see. So if you just take all 2 and then narrow it down a little bit, make it so that it's the information that we need to give you the best feedback, please. Andy, are you in here? Split triggers, man. Big indecision. This is where working that reversal bar pays dividends, without a doubt. So much so, that's why I added it to the classroom every morning, because I'm seeing this happen a lot. Andy, it's not just you. But there's a way. There's a way to avoid getting run over on these. And it's very much forcing the market to confirm, to go in the direction. Let me see where I'm at here. Bum, 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 bum. We saw a muser. We saw the race car. We saw Ron going to second base. Everything says down. The momentum is good. Ron says, just give me a bite. Just give me a little bit. I don't have to be in every move. I'm just going to take the best moves. Odds favorable, 50-50. Everything says down. You enter on that little pullback. There's your base hit exit, but you moved your stop 3 ticks above the fib. You said it looks like it's breaking. So if I get stopped out at the fib, who cares? That was the target anyway. Beautiful trade, and you just held it. Kept moving the target based on the 8-3s. Would have kept moving down, but the market moved faster than you moved it. Wayne, great trade. Getting in with the momentum, the potential to break, and finding a way to grab just a little bit more out of it. This green line is the mid-band from your large chart, Wayne. This is the mid-band from your large chart. Superimposed on the small chart. I find it distracting. I take it off. But some people like it. And then Andy, triggers getting stronger, downtrend from a strong top. Perfect. You take the pullback at the mid-band, right at the top of the triggers, hoping that the mid-band holds, and it does. And that one was pretty easy. Nice job, Andy. All right, shadow picks. This is a small chart, not great momentum, but went short with large chart showing downtrend. Dig it. So from this point of separation on the large until they come back to the large shadow pick, dude, that's the best. Separation between the small and the large triggers. And that's knowing the difference between the large and the synthetics. So as long as these small triggers are down and they're outside of the large, you actually have odds favorable momentum to the downside. I don't know if that's good or bad. You're killing your current trade. Hopefully that's a good thing. So Wayne, right click on your small chart and go to indicators. And then from indicators, you have to go to the synthetic. This is the one that brings stuff over from other time frames. And it is plot midband. Let me take the picture too. You're good at following rules? I love that. I'm not. It kills me. Make sure that one's unchecked from the synthetics, Wayne. And then click apply. And that'll take that one off of there for you. Some people use it for targets, but I've never had a problem just looking right and seeing the midband. You're welcome. Stolen base. I know exactly what this is, Ron. And Andy, this is a good one because I know that you're trying to emulate Ron a little bit with that counter. Let it confirm a little bit. And he gets in on the third divergence and he's like, it's confirmed, it's good, I'm on the right side of the triggers, the smalls are coming up, we're weakening stuff, pretty easy run. Definitely a little more high probability than not waiting for confirmation. Good lesson there, the pirate trade. All right, Miss Jen. Not odds favorable momentum. Trigger stay below midband. Price 2. Another T-making trade. Botched Ron trade. Back of price did clear. But you don't have momentum, right? And I love this, guys. And people are trying to emulate the Ron trade. And it's amazing how many ways you can screw up this trade. It really is. It seems so simple. But this is where I encourage you to ask yourself, if I'm taking a momentum trade, what do you guys suppose is the most important rule that is met? Just for grins. Anybody have an idea? What do you suppose is the one thing I shouldn't do without in a momentum trade? Momentum. Amen. You screwed up. Jen, that's what I did. And you're absolutely right, guys. And that's that little thought process. And Jen, I'm telling you, I spent 30 days screwing up Ron's trade. 30 days screwing it up on simulator until I finally got it through my thick skull. And this was one of the best ones for me, is reminding myself that the only way that I can have a momentum trade is with momentum. I actually, because you know I sketch when I'm waiting for trades, I did a big pretty block letter shadowed out OFM on a piece of paper in front of me just to remind me. And then over here, it gets even easier with almost the same result. Shadow picks, that's awesome. You're up $17.90. I'm going to call your salesperson and tell them that you will be purchasing software today. How could you not, right? How could you not? And Jen, once again, courageous hold. Courageous hold. You held through 4 divergences. You held through trend changes. You held through pushes up with odds favorable momentum. because you believe the small or the large chart was going down. Shadow picks. You bought the pullback. Shadow picks. Can I assume that the large chart had odds favorable momentum? Can I assume that the large chart had a clear path? Can I assume that you knew that the synthetics were way down here? Is that it? Large chart? So termination, momentum is there. And you said because it's up strong, because it's coming from a termination condition, I'm going to see if these areas hold. I like it, Shadow Picks. Not high probability, but I like it. I like that you're thinking about momentum. There it is right there. Oh, Steve, have a good one. Sorry, I missed your goodbye. So if you hear this later, I like it. And that momentum continues up. Shadow Picks crushing it today. Woo! I don't know what that is. Oh, that's your 3 charts. Dig it. Oh, so Shadow Picks. Can I make a suggestion? Can I make a suggestion? Put your charts next to each other. Rearrange them. Not even put the... Yeah, put your large and small next to each other and put this nonsense off to the side. So I have this one on the left side, on my left screen, and then I've got... I actually have my large and small on just one screen. How big are your monitors? $27, $32, $14. Oh, good Lord, Shadow Picks. You can go... I know Walmart sells 32-inch monitors for less than $200. True story, Goodwill always has monitors. Usually around 27 inches for $20. I had a friend that just did that. Facebook Marketplace, Craigslist. You can, guys, monitors are cheap now. 14-inch monitor is tough. 180 on eBay new. Amen. And Rob, I don't think I saw yours. Are you sure you posted it in this room? Because I don't think I've missed any yet, but I haven't seen one from you. You sure you didn't post it in the other room? Veronica's posting. Will you repost it for me then, please? Because I don't see it. I just scrolled up and I don't see it. And the best annotations, Veronica, start with LOL. I love it. So let's see. Trying to figure out this platform, nonetheless. Took the buy-off pullback, strong triggers, fib turns blue for support. So let me see where you entered. So Veronica, let's walk through this trade. Everything set up first, right? So you were thinking I need to buy the market. I just want to make sure. And you saw the strong triggers. So you said not only is the market going up, but it's going up with strength. And you said, I know I should be looking for an entry. Don't worry about the color of the fib though, Veronica. Let's use the trigger lines. And your small triggers had smashed through, and your large triggers were dragging a little bit. And what you actually did beautifully, Veronica, is you took a momentum style trade that Nexgen teaches. When the large chart is strong and has the potential to break an area, buy a little snap back to the fib and carry it. And you actually did it flawlessly. Going with trend, going with momentum, and using that momentum from the correct side of trouble to ride that momentum to the next fib. So there may be a little bit more to this trade than you actually knew. But what's awesome, oh, good, Wayne, is that you let the large chart tell you which direction you should be trading. You let the large chart tell you that you had momentum, and you just looked for an opportunity over here. And I love that because that's how you use the software. Nicely done, Miss Veronica. Not a high probability trend trade, but that sure is a nice trade. All right, Rob, odds favorable, momentum, and a clear path, right? On the large chart. So you're not running synthetics. This would be the first thing that I say, Rob, is you're not running your synthetic triggers, which means that all of these areas that can be impactful are not on your large chart. You should have had a fib right here. You should have had a fib right here. You should have had a fib right here on your large chart. Does that make sense? You're not pulling over and you're not giving yourself the highest readout here. So this fib right here should have been red. Okay, do you have tick data checked? All right, then something's afoot. So one of the things, Rob, let's do two things here. The first thing is that's freaking amazing. That is odds favorable, clear path, jump in, jump out at trouble. And Rob, this right here, if you don't do anything else today, I want you to celebrate the ever-loving crap out of that exit. Because you got paid in an area. And man, so virtual high five coming your way right now. Because I know that's hard and I know that's one of your focuses right now. This trade right here, Rob, is perfect execution. Perfect execution. This trade is perfect execution, Rob. You were looking at odds favorable. You were looking at a clear path. You got in just above support inside of triggers. Your stop, instead of being at 75, could have been at 78.75. 2 ticks below the reversal bar. Does that make sense? So once it starts to go, you can reduce risk. This was a 50-50 trade. And that's the one thing that having this synthetics over will do for you. It would have said to you, this is not a clear path. It's only the potential to break. See, the preset stop, Rob, this is like, okay, how many miles can you drive on a tank of gas in your big old farm truck? Like 12? 14? Just because you have a 100-mile range doesn't mean that you have to drive 100 miles, right? You go where you're supposed to go. If it's 2 miles, if it's 10 miles. So 12 ticks, Rob. I'm going to type this out because this is a good lesson for everybody. If your initial stop is 12 ticks, this gives you time to put the stop in the correct spot. Rob, it's okay to get stopped out. But you didn't have to, you gave up a whole extra point. You gave up a whole extra 50 bucks, $5 on the MES. So Rob, you've got to have a plan. You take the perfect entry. The large chart is perfect. Your initial stop is 4 to 5 ticks below the triggers. Beautiful. Your stop's in the correct spot. And if they push down and get you, Rob, you're out. You're done. Who cares? Your trade was perfect. Anything that wins 80% of the time loses 20 to 30% of the time. It's just math. But Rob, once it says to you, hey, Rob, guess what? We're going in the direction of momentum. Rob, I don't know if you noticed, but we're going in the direction of your clear path. Hey, Rob, everything that you hoped would happen is happening right now. That's where you say, cool, I'm going to reduce my risk 2 ticks below that because it says it's going to do it. There's your risk. And then if you were in at 80.75, do you want to see something that is crazy? 82.75 is $100. 82.75 is $10 on the MES. 82.75 is your first target using the KISS plan, Rob. And in this trade, instead of giving away 3 points, you could have made your 2 points on the first contract, and that's another $10 in. Does that make sense? You got stopped out because the sellers decided that they wanted to go down. And stop placement's a big part of it. Both trades, though, Rob, freaking beautiful. Both trades are awesome. Second one had a little management opportunity. And it even gave you a second reversal bar. You could have reduced risk even more. You could have had 2 ticks on this one. Been dancing around, $6 up to, finally took the up to live another day. Love it. The one thing about the MES, though, Rob, is that $2 is gone because of commissions. The commissions are more expensive. Made a good decision because 15 minutes later I'd have been negative. I hate being patient. Not in your makeup. It's not in mine either, man. It's not in mine either. But does the stop placement lesson make sense? Because I think that is going to be one of the keys for you. And then one other thing that I did, Rob, when I was trading the micro ES, I want to show you a cool trick. So if I take this chart and turn it into that micro ES, it's the next part. It's the next step. Your entries are looking great, dude. Your entries are better than they've been in the time that we've been together. So now we have to work on management a little bit. Let's keep working on it together. I promise I'll nag the ever-loving crap out of you. So here's one of the things, the difference between the MES and the ES, right? ES drives, guys. The ES leads the MES. The large S&P is where the decisions are being made, Rob, and the small S&P follows it. This is not where the professional traders are. So one of the things that I did when I was trading the micro ES is I let my large chart be the large ES. I use the fib areas on the large chart for terminations. I use the momentum on the large S&P for momentum. And then I use this one over here only for execution. Because, no, you don't have to have $500 to see it. Do you see how this is the large S&P? This is the small S&P. This is the MES. I'm only using it for execution. That's it. What's normally a $125 target is a $12.50 target. But I'm letting this large chart lead the way. I'm letting this large chart say up. And you can see that the ticks are different, but the MES, it follows the large ES. So why not get that great information from the large chart, from the big contract, and just execute on the small? No, they're not the same. They're completely different markets. Completely different markets, traded by completely different people. But the MES follows the ES. It always has. And then when you go to crude oil, the MCL follows the CL, but not as accurately as the ES the ES leads the MES. So they're really similar, but they're a little bit different. So that's just one of the things I did is I changed my large chart to the ES, and I let my small chart be the MES so that I could have that 1/10 the risk. That's not trading advice. That's just what I did. So right here, Rob, why did you go long? Did I miss that picture? There it is. Why did you go long? You didn't have momentum, right? Smalls are on the wrong side of the large. You let the small chart talk you into things. Do you see that? You're trying to take that momentum trade, but you're doing it without momentum. Give me a Y or an N. Do you see it? Smalls below the large, the background's red. Just no reason. This is where you have to be a little bit patient. It had the potential to go up. Yeah, that's your look. Remember how easy this trade was? This one was like, ah, I dare you to get me with that level of momentum. This one, the market's going, meh. We're probably not going anywhere. There's nothing to push it. Big difference. Great lesson. And you say 2 divergence means momentum over. Man, Rob, a close on the wrong side of the small triggers means momentum is over. A close on the wrong side of the small triggers means that momentum is over. Good stuff, dude. You're taking great lessons, and you're becoming a little more patient, and I like that. That's good stuff. Morgan, you're disappointed because you got stopped out. The consolidation these past 2 days has gotten to me. So let's look at it. Not a strong bottom. 50-50. Split triggers. Confirmation bar. This is twice. We've seen it a couple times, guys. Split triggers. Huge gap in the areas. Not the perfect trade. Not from a strong bottom. The consolidation didn't get you, Morgan. I don't have a plan that says just jump in at a mid-band and hope for the best with this look. If you do, perhaps, maybe, possibly, you should go read the entry rules for the KISS plan one more time and let's optimize your chances of success. Right? Guys, I'll be back in 2 minutes. And Morgan's been through it with me, and he knows it, and he knows that I'm going to shoot straight with him. And guys, on the KISS plan, I want you to see something. For the 50-50. From a strong top or bottom is my first requirement, guys, to optimize your chances of success from a strong top or bottom. Because when decisions are made at these key areas and the triggers can't break and it reverses, that's powerful. And that one was missing. And then the other one, just going back to the idea that split triggers. Yeah, Morgan, there's a time for confirmation and there's a time to not take confirmation. But if you're already on an iffy trade and you've already lost your first advantage and you don't have a clearly defined window, this is the time, ladies and gentlemen, where confirmation pays dividends. And if this hits your stop, brother, you probably never got confirmation. Does that make sense? And it sucks to take a loser, and it also sucks to hear that it was an avoidable loser. But this is one of those times where I feel like there's just no reason to take that loser. Because if I'm from a bad bottom, Morgan, the mid-band's more likely to hold. And if it's stacked with a fib, it's even more likely to hold. And if my triggers can't agree, it's even more likely to hold. I see why you did it. It just wasn't time to do it. So what do you guys think? Weak triggers but clear path. No areas inside of favorable large triggers. If you took the confirmation bar, that's cool. But guys, this is one of those avoidable. Rob, we are 12/24, brother. We are in the December contract. Holy downtrend, Batman. Here we go. And there it is. And Morgan, I had a fib right there to the tick. But it didn't give you a reversal bar until right here. Way outside of the triggers. And now we're odds favorable directly into a fib. And yeah, you're right. They've been fighting a little bit, right? Look at that. You can see the fights in the market, guys. And you know, I wasn't actively trading or paying attention, I don't think, last election year. I don't know if it has anything to do with it. I don't know if turmoil in the Middle East has anything to do with it. I know that there's been opportunities to make money. And you just kind of have to find yours. They're out there. So, Morgan, let's talk about it. And great. I love this. Let's talk about it. Let's pull up a 50-50. This is going to be a good lesson. I love this. All right. So we're going to do a couple things, and we're going to annotate. And Morgan, thank you for setting this up for us. Here's our potential trade. And we have odds favorable momentum. And we have the potential to break. Everybody with me on this look, the 50-50 look. Odds favorable momentum, potential to break. And Morgan, we are coming from a strong bottom. There's their termination right there. I had it. So what does this mean? And this is exactly what my brain does. Because it's only potential, I want to make sure I don't give any other advantages away. And that's exactly what my brain says. Once I know that it's 50-50, once I know that one of these advantages are gone, where's my picture? I used to have pictures up. Once I know that I'm giving one up, and I've encouraged you guys in the past, and maybe you want to do it today, is print this out. I'll give it to you. Print this picture out and cut 3 strips of paper. Just 1, 2, 3, right? And if you're giving away the clear path, what should we be insisting on, Morgan? Momentum in an entry area, right? Because the clear path is gone. Ladies and gentlemen, let me know if this makes sense. Once I define that my path isn't clear, I've got to make sure that my momentum is good. It's awesome on the large chart. And then let's talk entry area. At the time of the reversal bar, this is my window of opportunity, guys. My window of opportunity is, goodness, $180 worth of risk per contract. Morgan, how do you feel about $180 worth of risk per contract on a maybe trade? You may be cool with it. You may not be cool with it, right? So what happens is you define that it's not perfect, and because of the rules for entry, you define your risk. And I've got someone that does this. I have one guy that says, I will only enter at the bottom of the window because it gives the least amount of risk. And this is that next step, Morgan, right? You look at it, you say, golly, that's a lot of risk. I'll tell you what, if they pull back here, I'm willing to take the trade, right? And then you know that you've got 7 ticks maybe on this trade. And if it doesn't work, whatever, it's a tiny loss. Does that make sense? So that's one option. I'm just going to stack this. The other option is, let's type it out. 180 is too much. I'll wait for a reversal bar so I know what my risk is and where it goes. So you say on the other option, you know what? Whoops, what did I do? I don't know. I like the look. I like the momentum. It has the potential to break. Life is good, but this is just too much freaking risk. I'll wait for this. I'll wait for this one that says, hey, guess what? It's going the right direction. And then Morgan, this is your trouble spot, right? 29? It's only 90 bucks. But the rules for the KISS plan say get paid at the trouble and get to break even. And these are the ways, guys, that you can take less than perfect entries. And if you know what you're getting into, and I think this is the point that I'm trying to make here. If you know what you're getting into, if you go through that process of saying, my path isn't clear. I need momentum and a good entry. My entry's too big. I need to insist on less risk. How do I mitigate that? Well, I either take it from the bottom end and I'm willing to miss it, or I force a reversal bar, which I know doesn't give me a win guaranteed, but at least my risk is established. Does that make sense, everybody? And this is where you go with your trading. You'll start to do this every time, and it all stems from being able to speak to yourself in terms of advantages. I love this lesson, Morgan. So you're like, when do I wait for confirmation? When the risk is too much, when the entry isn't perfect, but the advantages are still there. So that's a great example of how the more in tune you get with the software, the more in tune you get with these advantages, the easier it becomes to manage, the easier it becomes to, I don't want to say take chances, but the easier it becomes to understand what you're up against so that you can make intelligent decisions based on advantages, on whether or not you're willing to enter that trade. Does that make sense, guys? Do I need to scroll down? Doesn't make sense to anybody but Morgan. Cool, that's all right. That's okay. And guys, that's what this class is designed for. And sometimes you just shudder because, oh shoot, Mark's about to turn my chart into a lesson. What a great thing for Morgan to post that in there, for him to ask those questions, right? What a great thing for you to voice something that you're not comfortable with, because there's 37 other people in this room that are going to take that one. So especially my new users, my demos, Chief Redneck, I can't say that one enough because I think that's such an awesome one. Miss Veronica, Miss Hong, right? Guys, be vocal. If it doesn't make sense, force me to explain it. If you think it makes sense but you're not sure, force me to explain it. If you think you have an advantage but you're not sure, take a picture, drop it in the room. Let me explain it. When I told you that I would give you everything you need to be successful, I meant it. The only thing that I can't give you guys is repetition. The only thing that I can't do is force you to study, to make you take pictures, to have you annotate charts, to follow a plan. That one's on you. I don't have momentum or a clear path, do I? They're pushing down, but it's still not there. And guys, there's something to learn from everybody. And once you're a chart reader, you'll find your way. Yeah, once you're a chart reader, you'll find your way. Did you know that John Novak and I read charts exactly the same but can see two different things? We can take two different charts, and he might or two of the same charts, and he may find a trade and I may not, because it all goes back to the rules. You've drunk enough tea today, being patient for a tea setup or for a trade setup. I love it. Do you put cream in your tea? That's so weird to me. Of course, here in the South, milk, people put 18 pounds of sugar. I don't know why everybody's a diabetic. I don't like sugar or rum. There you go, Ron. Well, you're a pirate, so it works out. It's funny how regional. I used to work with a guy that was from England, and he would take iced tea and drop milk into it. And it was so weird. And you know what? I never tried it, and I probably should have because it's probably delicious. I put milk in my coffee. It just makes sense. See, but that's gross. It's just like an it's just like an iced coffee, though, right, Jen? But in Texas, there's not a lot of hot tea going around, so he converted it to iced tea. And I guess he was just way ahead of his time. Tea blah. Different strokes for different folks. I'm the same way, Ron. But I don't put sugar in either. Kept you out of trouble? So not odds favorable or a clear path, right, Jen? Does it mean that it's not going down? No, I don't know what it's going to do. But what I do know is that my rules aren't met, that this isn't my highest chance of success, and I'm cool. I'm cool with not being in a trade. It doesn't bother me. And I was telling my brother this morning, I was watching the market, I was like, you know what, I'm just going to stop looking for trades pre-market right now because I have more success after class when the market's moving. And it doesn't mean that I don't find opportunities pre-market, but I don't get upset if they don't happen. I don't try to force them. And that's, Jen, amen. That's one of the things that people don't get. So we've still got time, and I've still got air in my lungs, so let me flap my gums a little bit. If you took this short and got stopped out right there, right? And you just lost $100. Bummer. And if you did it there into the termination, you lost $100. And if you did it there into the termination, right? And you keep losing these monies. It's hard when you don't. So there's nothing worse than making $600 on easy trades, on easy high probability trend trades, right? But giving away $700 on breaking rules. And being down $100, even though you caught two perfect trades. And this is why I say, guys, more often than not, the difference between the people that are making money consistently and the people that are not is the ability to do nothing, is the ability to do absolutely nothing when there's nothing to do. Does that make sense, everybody? That's the best lesson I could ever give you outside of chart reading, is learn how to do nothing. All right, so Hong, I'm going to do this. I'm going to go back to yesterday to answer your question. So from midnight to, let me tighten it up here. So I'm just going to do this. Hong, this is one whole day. Do you see it? From the 22nd, all the 23rd right here. So the market is open. Crude oil opens at 9 a.m. So crude oil opens right here. And that market remains open until about right here. So this is when the market is open. Anything that happens over here is considered pre-market. Does that make sense? Cool. And that's it. And sometimes the market moves amazing pre-market because people can still trade. But like the official open, the bell doesn't ring for the S&P until 9:30. Hey, Gus. Absolutely you can trade pre-market, Wayne. You guys know that I'm here in this room for the majority of the big chunk, right? But pre-market, absolutely there's opportunities. Absolutely there's opportunities. And in crude oil, no, not at all, Hong. Because you're not worried about whether it's pre-market or post-market. You're not worried about whether it's crude oil or the S&P. Hong, the only thing I want you worried about is whether or not your rules are met, whether or not you have an advantage. So if your advantage is there pre-market, take it. And if your advantage is there in the afternoon, take it, right? And let me see if I can find, what was a big news day? You don't have to, no, not at all. When I was living on the West Coast, Hong, or over in Pacific, I had to wake up at 4 a.m. Guys, I'm not clear at 4 a.m. So no, there's people that trade in the afternoons, absolutely. You still have plenty of time. And market close is like noon 30 your time, which is amazing. Sorry guys, I'm scrolling back and I'm trying to find a big news day real quick. 8:30 a.m. typically is when it happens. I'm looking, I'm not sure I'm going to hit FOMC. I might. So my apologies if all of this scrolling is giving you a headache. That's not my intention. 8:14, 8:30. Almost there. $8:30. That wasn't FOMC. I think that was the day after FOMC. I'm gonna see if I can find it. Whoop, I'm done. Sorry, all of that to say, one of the things, guys, about the software, and it's pretty awesome when you realize this, is that even during the crazy times of news, it still bounces off of fibs. You still get high probability trend trade setups. It's just too fast to do it. So Hong, if you didn't want to start trading until noon, noon 30, I don't know, just one of the things I've said my whole life. If you didn't want to start trading until, 8 a.m., 10 a.m. your time, wake up, have coffee, do something, it's no big deal. The markets are moving. I don't get to trade between 9 and noon because I'm teaching you guys, right? So I miss a 3-hour chunk. I miss from the open until 3 hours through. And most of my days, my first trade is taken after noon Eastern, which is 11 a.m. my time. So all you're doing is you're looking for patterns. There's people in the other room, they trade gold in the evenings. So there's a guy, Paul, he's up in Seattle, same time frame as you. He gets a lot of his trading done in the evenings because gold moves. Typically it's a little slower. You have to wait a little longer. The patience is huge. But probably for you, the best time is crude oil trades well until about noon Eastern, and then it slows down. And then that's where the S&P tends to move more. So you'll find your groove for sure. I don't know. It depends on you, really. When I replay, Hong, if I'm not even close to having rules met, right? So like if my chart looks like this, I might go up to 20 or 30 speed. And then when I start getting closer to maybe a trade, I'll slow it down. And then when I think I have a trade, I'll hit pause and I'll go through and I'll look at my rules and make sure that I'm actually following them. But what you run the risk of is when you speed it up is you run the risk of blowing right past a trade. So right here, I might be at 10 times. And then when it starts going down, I might even speed it up until about here. And then I'm like, oh, wait a minute. I might have to catch a trade here. Let me slow it down. And if I get it, cool. And if I don't, and you know, so you'll find the speed that works for you. I go a little faster when there's no rules met, even close to being met on the large chart, and then I'll slow it down once it happens. So C-Dub, is this a momentum trade? No, it's not. What you have is a strong trending market. You have a clear path. I don't know what that means, you have a chart above. Did I miss one of yours? Oh, Wayne, sorry, I thought that was C-Dub. Yeah, I got you. I'm sorry, I just realized that when I clicked on this one. Give me 1 second. Sorry, Wayne. Not odds favorable momentum. You're on the wrong side of everything on the small. Definitely not a momentum trade. How could you have momentum trades without momentum, right? And you don't have any small triggers on your small chart. And oh, Ron just posted that. Where are your small triggers, C-Dub? Yeah, get that template back on there. But what this is a trend trade in a strong trending market. Sell the midband until it quits working. It's a beautiful trade, dude. But it's not a momentum trade. It's just a trend trade without the best entry. Still a nice trade, though. Whew. So much going on. All right, 30 bars direction with waning momentum. Not a clear path. Wayne, really not even close. You enter from the wrong side of every fib. Do you see it? From the wrong side of every fib. Below the fib, below the fib, below the fib. Does that make sense? This is common when people start taking these trades. I don't care. Couldn't care less what color it is. Watch this. Wayne, if you write 9mm on a 10mm socket, does it make it a 10mm socket? No. All right, I'm taking the colors off. Did you trade into those lines or did you trade from the lines? Well, how many 10mm do you suppose you've gone through in your life? I'm up to about 300, I think. That's the one that always goes away. So this is one of those times, Wayne, where you're like, dude, it says up. Man, I've still got some momentum. I'm strong trending. But that doesn't change the fact that this is still a line that could screw stuff up. So how would you feel, hypothetically, and let's use the small chart here. And I want to say that Veronica took this trade. Let price come through and snap back a little bit and trade from the fibs. And it creates great opportunity. And what you'll find is that you won't get stopped out quite as often. I love the trade. But I feel obligated to tell you that your entries are going to be easier on the business end of the fib. And that's it. Not mad about the trade, but sometimes I see a way to do it a little better. And then the cool thing is too, is if you get in on this bar, you know exactly where your stop is, right? And that makes life a little easier. It's a good look though. Sorry I skipped it. I will skip your trades every now and then, guys. Just make sure you call me on it. Make sure you say, dude, Mark, come on. And this is kind of a neat phenomenon. And this is why, Wayne, that I do that. When it hits this, there's a tail, which means that there was a fight on the small chart. When you hit the fib, there was a tail, which means that there was a fight on the small chart. When you hit the 1-to-1, it did it, right? When you hit this one, it went above and then back below. And then when you hit the 1-to-1s, there's the fight. This is kind of a cool little visual. Look how often stuff gets a little wonky right at the lines. And that's why trading from the areas is always easier. Does that make sense? Ron, the room is like watching football. Better picture at home on the big screen, but there's nothing like being at the stadium. This class is the trading stadium. I like it. Man, I appreciate it. And Ron, you know that you teach me every day too, so I do appreciate it. Yeah, Wayne, and that's one of those times where I start making these lessons that aren't necessarily about your trade, but it's a good lesson. Stuff happens at fibs, so if you're gonna get in near a fib, get in on the right side of it. No, Hong, I don't focus on the tails at all. Great question. There you go. No, Wayne, that was a kick-ass lesson. Don't you downgrade my lesson. No, I'm just kidding. But the lesson's a lesson, right? Like when they teach you to look at your shifter when you miss shift coming out of the turn and pretend that it was the shifter's problem and not yours. Same thing. Jen, have a great afternoon. Thank you for being here. All right, so Hong, when we're looking for a trade, when the rules are met on the chart, price is all the way up here. And there's no tail at all. This bar before the entry looks just like this bar. And the price is all the way up here. Does that make sense? Let's make sure that makes sense first. But the rules are met. I've got momentum. The path is clear. Life is good. Yeah, I know. Sorry, Wayne. I was trying to be a smartass. It didn't come off well. So if it were live, stop focusing on the timestamps, Hong. Look at where price is. It doesn't matter about the timestamps. We're not timing out timestamps. The price is 97.05, and price is consistent all the way across the board. Does that make sense? Over here, it looks like 1250. Here, it looks like 1256. Make sense? If you wanted to come down from the small chart, you're probably right at about 1250 and 45 seconds. But it's really the large chart look. When the rules are met for a high probability trend trade. Hold on. Bum, 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 bum. We'll use this one for example. Let me take everything off. And we'll go through it bar by bar. And okay typically means that doesn't make sense, Mark. Shut up. I don't want to ask the question again. Maybe not in this case, but very often that's what that means. I'm going to take everything off but the triggers for this lesson. I love this lesson too. Is it? They're just killing it, right, Wayne? Happens some days. So let me let those triggers come up. And once they do, Hong, I'm going to show you why we don't trade the tails. There we go. All right. So when the large chart says that it's time to take a trade, hopefully I have these lined up right. This is exactly what it's going to look like. Do you see how the top of price is right here at 67.75? It's trading all the way up here, Hong. And you have odds favorable momentum. And it's a clear path. And there's no tail. There's not even a hint of a tail yet. It's just the same looking bar all the way up. And then over here on the small chart, when we look for an entry, we wait for that reversal bar. The top of this bar is where the reversal bar starts. And then hypothetically, we're going to trade a pullback, right? And we're going to trade it to one of these areas inside of triggers. Are you with me so far? Odds favorable, clear path, reversal bar, highest point of support, lowest point of support inside of triggers. We've just created the window of opportunity. And the market comes down, and the large chart doesn't blink. It still is odds favorable, clear path. And it comes down, and it hits the area. Whoops. And I hid the bar that this is actually on. Look what happens if I put the box right on the area, right at the triggers, right where your entry is. It's right at the bottom of that tail. So we're not trading the tails, we're trading the pullbacks to areas inside of triggers. Does that make sense? I'm not trading this tail, but rather this tail is the pullback to the line right inside of the triggers. So the small chart defines where the tail is most likely to happen, but we're going to focus on the areas inside rather than the tail itself. Does that make sense? Cool. But we can use the tails to study. So if I open up a large chart, whoops. What am I doing? If I open up the large chart and I'm like, I'm just going to circle tails when I have momentum, right? I'm just going to circle this tail because I have momentum. I'm just going to put a circle on this tail because I have momentum. Well, then what I can do is find those tails on the smaller, faster chart. 940. Did that tail line up with an area inside of favorable large triggers? Do you see it? This is your entry. This is a great way to study it, to go back and circle those tails and kind of go through it. This one also pulled right back to a midband right inside of the triggers. Circle the tail. Let's see if it works without odds favorable momentum. Ooh, probably not an entry. Hey, take care, Morgan. Good one. Great question, Hong. So we're not looking for those tails. We're going to look for the pullbacks to areas inside of triggers initially. And we can use the tail as a little bit of a study tool to see if the rules were met. And that's how you're going to kind of burn that look in your mind. And that's why using that language, area inside of favorable large triggers, becomes so important. No areas inside of favorable large triggers. Definitely clear path in a strong trending market. I wonder if I could just wait for a reversal bar for confirmation so I know exactly where my stop goes in the event I make the decision to take a long trade. Kind of cool, right? Trading above all the fibs, room to the next target. I just don't have the momentum. I've got that strong trending, but I don't know if the mid-band's going to stop it. I don't know if this fib, that fib, I don't have any idea if it's going to stop at all. So I'll force it to give me some level of confirmation so I at least have a stop in place. Does that make sense, guys? For y'all that are like, man, I really want to go long because everything says up and I have a clear path. It's not perfect. Why not wait? You don't have to. You might just say, that's not my trade and cancel your order. Totally up to you. And guys, we survived another day together.